Hey, good evening, everyone. Welcome to another weekly money space with me, Kalu Aja. Of course, we're here every weekend, 7 p.m. West African time. We're talking money, the economy, and personal finance. We're here every week, and we're glad to have you guys back with us. Couldn't be prouder to have you guys here. This week, we're talking, of course, the economy with investment, right? Of course, with also personal finance, because we're talking about the biggest anticipated IPO, not just in Nigeria, but I would even say in Africa. This is going to be the biggest initial public offer from the African continent. It's the Dangote refinery. It's massive, right? So it's going to be a massive offer. And we are still at the introductory stage, book building stage with with the refinery and all. So we decided it's going to be a good idea to talk broadly about what investors should look out for with this kind of offer. Also, what should you? Is it a good deal? Like what is this one? My DMs always tell me the pulse of what's going on. People always ask me, when is Dangote coming? Should I buy? What's the price would it be? Everybody wants to buy. There's a lot of FOMO that is out there, which is the fear of missing out. The Dangote refinery has been built up that everyone is investing. Foreigners are investing. We're exporting. I think Dangote is now the largest exporter of aviation fuel in the entire world, right? So there's a lot of, I want to be a part of this story. I want to own oil and gas. Dangote is the largest in the African continent. I think it's the second or third largest in the whole world, single train. So there's FOMO out there. But always when there's FOMO, we always have to come back to reality and say, where are the numbers? What numbers should we look at, and what makes sense for us to take a peek at? I invited Olumide. He's not yet here. Once Olumide is here, we will add him. And of course, we'll start the conversation. Again, I've got some great slides which I've done. I did some research to pull out some figures for you guys, right? So we can look at those numbers together. And the idea is not to sell you Dangote or to say not to buy. The idea is to give you numbers that you can go back and say, okay, this is what I'm going to look for in this offering. Because make no mistake about it, the Dangote offering is just like any other investment they're going to have out there. You've got to ask yourself, if I put one naira in this offer, am I going to make my money back, right? And you also have got to compare this offer with every other offer out there, which means that the cost of Dangote is the opportunity cost of you not investing somewhere else, right? So the cost is not what you are paying. If Dangote comes out at maybe $10 per share, that's not the cost. The cost is, what are you foregoing by investing in Dangote IPO? If you look at it that way, it starts to make a bit more sense for you, because even right now, globally, we're in the midst of this massive IPO push. Not just in Nigeria, also in the US, capital is mobile. We have Anthropic, we have OpenAI, we have Starlink, this was Starlink and all that. These are massive IPOs that are ongoing in America, but your capital can also invest in those IPOs. So when you look at Dangote, especially because it's paying $1 dividend, right? You are no longer looking at just a Nigerian stock. Once it starts to pay dollar dividends, then you're going to compare that dollar dividend with a foreign US or Euro or whatever stock out there, because you can then compare currency to currency. There's no exchange rate risk. There's no Africa in quote risk. You are getting the same dollars you would get if you did Anthropic, and the same dollar you would get if you did Dangote. So that's the point that we want to basically make that point here. Olumide is not here. So what we're going to do, we're going to sort of start. And if he does join us, of course, we always like to get his insight, and then we'll see where he's going to take us to, right? So first is, of course, to give our disclaimer, guys. You know what? We're just doing educational. Like I said, everything we're talking about is educational. No investment recommendations being made. We're not asking you to go buy or not to buy, but we're basically saying, hey, you've got to um, know your numbers. Know the numbers behind Dangote, and that's going to give you a better way to approach this investment. All right. So again, we're on YouTube, and we're also going to record this space so that at the very, very end, you essentially have this with you. You can go back and listen to it, and if anything jumps out at you, of course, that's going to be our objective all the same. So we've done the disclaimer part, which is very, very important. And again, guys, I want you to be interactive. If you want to ask a question, please feel free to hop in and ask those questions. Let's go to the first slide based on my research. This is just the GDP stuff of Nigeria, right? And we do this every week. Remember that the Dangote refinery is going to offer its shares in this environment. If you look at this environment that we have for Nigeria, inflation is about 15%. So anyone that is investing has one thing on his mind. Will this offer, will this dividend allow me to beat inflation? I'm hearing they are going to pay me dollars. That's fantastic. So that means if I invest in Dangote, I can get a dividend that can beat Nigerian inflation. Will it also beat US inflation? That's one thing we want to ask ourselves. Number two, Nigeria is in an economy where the economy is just expanding. We've not yet hit 4%, right? Or we hit 4% on a quarterly basis, but annually we have not yet hit that 4-5%. Remember, Nigeria was doing 6, 7, 8, even 9% just a few years ago. So we're not yet at our full stride. And it is this market that's going to absorb 1.46 million barrels per day. That is very, very important, because look at the whole concept of Dangote was to take a refinery, put it in Nigeria, yeah, and I believe he wanted to get the crude oil, of course, from Nigeria, refine in Nigeria, and then export. That's why it's in an export-free zone. That's why he's in Nigeria. He could have put that refinery in Cameroon, Ethiopia, Togo, or Ghana, but he wanted to put it near the industry, i.e., crude oil. But look what's going on today. Dangote cannot get crude oil locally from Nigeria. So Dangote is importing a lot of crude oil from the United States. Whether he's paying Naira for those imports or he's paying dollar for those imports, it's not that material, guys. People always say this. What matters is the exchange rate he's paying. If he's paying for his crude oil from Nigeria at the same exchange rate that you buy crude oil on the streets of Lagos, then what's the advantage that he's getting crude from Nigeria? You see the point I'm making? It would have made sense if Dangote was getting crude in Nigeria, paying Naira for that crude in Nigeria. And then if he was exporting in dollars, then he can then turn back and say, hey, I am making X on my Naira and I'm earning a foreign currency on my Naira investment. Yes, so now he's paying Naira, but he's not getting the crude. That's why he's going out to import, right? So there's no problem if he's importing. His refinery is built to accommodate many, many types of oil grades, but he's importing crude oil. So that margin would decompress a bit because he has to pay for that crude at international prices. He's not getting any deal when he's importing. He gets a deal when he uses local crude oil. But we're at about 1.46 million barrels a day. And remember, out of this 1.46 million barrels a day, we have already given most of this oil out as loans. Out as a loan. So essentially, most of this oil, maybe 30, 40% of it, also, we have all this NNPC that they've taken monies in advance on a loan and they've pledged about 10% crude oil to those guys, right? If you take out that oil, you are reducing the amount that can be given to Dangote. Remember, we don't own the oil 100%. The oil is also owned by the international oil companies. Keep that in mind. So if that oil output number for Nigeria does not go up, that means that the cost of Dangote bringing in crude oil to refine in Nigeria locally will go up. Keep that in mind. MPR, cost of capital, is essential because you are going to compete. If MPR is high, that means you can make money from bonds. So you have to ask yourself, should I buy bonds or should I buy Dangote IPO? So these are very, very important macroeconomic indices for you to look at in deciding if Dangote is going to be a good deal for you. Let's now go specific into the Dangote offer. And this is the good slide for you. So if you're on YouTube, you can see the slide. If you're on Twitter, I'm also going to copy and share it. So I just had to summarize why Dangote is such an important investment. Even if you're not buying, even if you're not buying the Dangote offer, it's going to affect your portfolio one way or the other. Why? Because the size, just the size of that offer in the market would mean that the entire market, i.e., the index, the NGX index, is going to slow down. Why? Because the denominator has increased. So you are just like if you have a shop, you put a million naira in your shop and you are doing 100,000 every month. So you are doing 10%. You put a million, you are doing 100,000. That's 10%. But what if someone gives you a billion to do as your capital? That means that you can't do 100,000. You have to go at least a million to maintain, just to maintain that 10%. But look at it this way. What if there's no market to absorb that 1 million? What if you can't find folks that would absorb that 1 million? That's essentially what's going to happen in Nigerian stock market. When you introduce Dangote to the index, the denominator is going to widen. So at the NGX, would have to then grow to match what Dangote is doing. I don't know if that makes sense to you guys, which means that your Prescos, your banks, your MTNs, those guys are going to be, they have to grow as fast as the capital that has come in. Otherwise, the overall index will just simply slow down or come down a bit. It doesn't mean you're going to make a loss. It simply means that the growth, the speed of growth of the index is going to reduce because the denominator, which is Dangote IPO, no matter the amount it comes, is going to be massive. But let's take a look at the refinery, just a snapshot of what's going to happen with this refinery. This is going to be a $650,000 barrel refinery, right? And Dangote, I think from what I read, he has to run that refinery near nameplate to be able to offer something to the investing public. He has to show that the refinery is viable. That's why they sort of delayed the refinery till about September and all, to run it near capacity to show that this thing is actually working so we can come to the retailing public to request for money, right? The total cost Dangote put in this refinery is about 20 billion. This is money that has come from debt and from equity, right? Where is the equity from? From the NNPC. NNPC was offered about 25%. They only did about 7%. So he got that equity, his own debt and his own borrowings and monies from Nigeria and all that, 20 billion, right? Current debt, again, this is all private numbers. We don't yet have the prospectus out. It's about 3.65 billion. So this IPO, this that's going to happen, when more folks are saying it's going to be able to allow Dangote to clean up the books, to reduce the debt on the refinery and then to allow the refinery to then move forward. Why is this important? Now, look at if you again, if you this is a summation, right? But if you understand the size of the refinery, this refinery is 650,000 barrels a day. So it needs crude oil to run that scale, that's 2,000 barrels per day. The calculation is that the monthly need to run that refinery in terms of dollar price at today's price is going to be about $1.5 billion every month that he needs to use to pay to import WTI or to buy crude oil from Nigeria, whatever it is. So whatever number is stated there, Dangote needs a lot of cash, not naira cash, dollar cash to buy crude oil to keep that refinery running, right? But he already has debt, right? So this IPO looks like the way that it's going to bring in debt, it's going to bring in equity because equity will not have that monthly interest cost. Bring in equity from investors, pay off the debt, and allow the refinery to have more room, more fiscal room to then maneuver to do pricing and the rest. So the target IPO is about 40 to 50 billion. 40 to 50 billion. Again, just look at that number and look at what Dangote invested. Dangote say he has invested 20 billion, but the IPO is valuing the refinery at about 40 to 50 billion. So just take a look at it. Someone built a shop last year and he put in that shop 20 million gala or whatever, right? And today he's saying that after a year or two, he's saying that that shop is now worth 40 billion. So what went from 20 to 40? The earnings. The earnings. If you notice, we've heard on the news, Dangote is exporting urea, is exporting fertilizer, is exporting aviation fuel. The whole of Africa has come to Dangote to buy goods from him. The stock market prices forward earnings, not today's earnings. So the market is saying that Dangote, because the Strait of Hormuz, lots of people are looking for alternatives, and Dangote has a working refinery that is totally cut off from the Strait of Hormuz. It doesn't buy its oil from the Middle East, buys his oil from America. His oil comes to America, to Nigeria. He also gets some oil from Nigeria. So it's a totally separate diversification package away from the Middle East into Nigeria. That's why he's looking at that IPO valuation of 40 to 50 billion. The question is that, is this overpriced, or is the market really saying, yes, we believe that already it's worth this amount of money? That's what we're going to talk about here today, guys, right? So again, Dangote's strengths are there: strong operational performance, but he needs a lot of working capital. That's why the IPO is being done. Because without this huge working capital need, he wouldn't do an IPO. I mean, why would he sell? Doesn't like, why would he sell to you? But he needs a lot of working capital. That's why he's doing here. So that IPO is to reduce the amount of gearing that Dangote is essentially running on his refinery. This next slide will give you a bit more. We're going a bit more technical now with this next slide. If you look at this next slide, we're now trying to compare. Again, I looked at the key refinery metrics. When investors want to invest in a refinery, what are they looking out for, right? So we're looking at the enterprise value over the capacity of the refinery. What I'm trying to do in this slide, right, is to compare Dangote refinery, the $40-50 billion refinery, with other global peers in the market. Like we have refineries in Saudi Arabia, in Kuwait, even the one in India, the Jamanga refinery. So we're trying to say, let's compare what Dangote is doing, i.e. the offer, the valuation, and the earnings with the global peers, and see if these are, do we have any insight from these guys? And we do have some insight. So let's look at the first insight, which is the enterprise value over the capacity, right? Again, Dangote, if you look at Dangote, the EV over the capacity, look like the 600,000 barrels a day, is about, I would say, $61,000, $61,000 compared to about $25,000 for global peers. So what we're saying here is that the valuation of Dangote, if it comes between that 20 billion to 40 billion that is being quoted, right? If you compare to the nameplate capacity of the refinery, right, and you compare it with what the global peers are priced at, right, Dangote comes out as very, very expensive, right? Just very, very expensive. It doesn't mean that the capacity for Dangote is smaller. It just means that the pricing for Dangote seems to be a bit higher, or seems to be a bit steeper than what you would get if you took the same refinery, right, that had the same nameplate but was priced lower. So there is a bit of a premium pricing for Dangote. And again, that's also qualified again if you compare the Dangote refinery, the enterprise value over the EBITDA, which is the earnings before interest, taxes, and amortization. Again, we don't have these figures publicly. This is just, we're estimating based on what Dangote's run rate is going to be, or what he's saying he's going to do. Again, Dangote is about 8x to 12x multiple. Global peers about 5x multiple. Same thing, premium valuation. Look at the price to book for Dangote, about 2.5. Again, if we're looking at a 40 to 50 billion valuation for Dangote, if we're looking at that valuation and you compare that with the global peers, it's about, global guys about 1.2, Dangote is about 2.5. It's the exact same thing. It's the same narration, right? The Dangote refinery at that price, that 40 to 50 billion valuation, looks like it's a very, very expensive bet. So the market, everybody, like I said, everybody is pricing Dangote as a high growth tech stock. I think one is what Olumide to be here. If Olumide had been on Twitter and had explained to people that when you have a stock, right, as big, it doesn't matter if it's Dangote, when you have a stock as big as Dangote, right, that stock can't do 100% in the next year. Not because it's not making sales, but it's simply because it's just too large. If you have 1 naira, you can go from 1 naira to 2 naira. But if you have 100 naira, it's harder to go from 100 naira to 200 naira. So Dangote is being priced like a high-tech growth company, like an Anthropic or an AI. That's how we're pricing Dangote. But Dangote is a utility, right? There is no secret of his business practice. It's going to bring in the raw material, it's going to process that raw material, and it's going to sell the processed byproduct of that raw material. That's it. There's no magic it's going to do. It's not going to do any new thing. It's just going to be cost of input, efficiency of his refinery, and his marketing. That's going to give him margins. There's nothing different that it's going to do that the guys in Saudi, India, or Kuwait are doing. So again, we're asking the market, are you overpricing this thing, or is it something that you think is going to be a lot better? Lumide is here, but just hand over. Let me just give you guys, if I hand over to Lumide. If you haven't read this article, right, you should look for it and read it. This is from African Oil and Gas Report. This was a report by this guy, Dimeji Bashir. If you haven't read it, please go before you think about buying the Dangote refinery. Get this article and read it. He did justice to the refinery. He talked about the entire refinery. He highlighted certain risks in the refinery. I mean, just one thing comes to mind when you hear single train, right? He's saying that single train means that everything's going to be single on one thing, because in my own layman's words. So anything that happens, right, it has a higher risk of something can happen and the whole thing it just stops, right? But I just highlighted a few comments that he made, and I want you guys to go back and read it. He says, pay attention to the working capital, not just the earnings before interest, tax, amortization, and beta. So he's saying this IPO is a play to get cash to repay debt, reduce the gearing. So pay attention to working capital, which means how are they going to finance that daily crude oil purchase? He says pay attention to the debt structure, not just the dividends. So everybody's happy that's going to pay dividends. But this gentleman is saying pay attention to the debt structure. How are they going to repay the debt that they have? And how are they going to continue to even run the refinery if they are going to take on more debt? Look at that, even as you look at dividend. He's saying look at the FX and other contingent liabilities. So look at what's the FX policy in Nigeria? Will that affect him? Can he export? Can he bring in all that kind of stuff? Take a look at that before you invest. Then I think the fourth one was, I think, the one that was very, very touchy. He said regulatory risk. There's a naira for crude policy. Will it continue? Dangote is in court, suing folks that want to import. What's going to be the outcome of that? Free trade status. What's going to be the outcome of that? All those things are going to have an effect on the Dangote IPO. For instance, if they stop naira for crude, or they say they stop, or they say anybody can import, it will have an impact on his margins. If it impacts his margins, it will impact his debt and the gearing. So these things matter. Dollar dividends, again, pay attention to it. Is that going to be allowable in Nigeria? Can a Nigerian company pay dollars in Nigeria as a dividend? Pay attention to that. Or will just only be like what Sabat is doing, they can pay it abroad, but not in Nigeria. So get clarity on that before you invest. Olumide, welcome. I've just gone through a few slides. I have a bit more slides where we are comparing Dangote and Nigerian IPOs. But let me take you really, really back to this space is all about, we want to really answer that question on the title. Is this Dangote refinery going to make cash for us that are listening? Or are we just doing FOMO? Or is this thing really the real deal for us?
Yeah. So, Carl, very interesting topic, and you did justice. Sorry for coming late. I was pretty more tied up. It's the end of the month, and writing about markets. The markets open in Saudi Arabia, so I had to do some reports on that. For listeners, I think Carlo has given you a perspective that is not commonly out there, because what we're having is that Dangote is coming out, Dangote refinery is being listed. There's so much positivity around that, and rightly, we are happy about it because just like you understand the fundamentals, Dangote has taken us away from being a net importer of petrol to being a net exporter of petrol. And also, industrialization around the Lekki axis also has been amplified. Look at the petrochemical industry that has kicked up. Look at the fact that we have the ability to now export raw materials for detergents across West Africa. Look at jet fuel in the UK. So it's so much positive. But, for me, I think we have three problems. First, the Nigerian culture. Secondly, the hype around Dangote refinery. Thirdly, the regulatory risk. So the Nigerian culture. So President Tinubu came in to power when the Nigerian stock market was less than 40 trillion naira. Now the market is hovering above 160 trillion.
Mm-hmm.
Since he's been in power, we've hardly had red months. This has been the best month in 3 years in Nigerian stock history. If you look at the red months in the 6 months, we've had less than 4. If you look at the NGX 30, none of the stock has been negative since he came to power. At least the worst performing has at least tripled. So it tells you really much how the market dynamics have changed, and the reforms around pension industry also accelerated push the stock market from the 100 trillion naira mark in January to 160 trillion as we speak. So yes, so exciting. And that FOMO has come on social media. Retail participation is high. You can now see that a lot of young Nigerians are talking about Aradel, talking about UBA, GT. You see them sharing about different, which is good, But the Nigerian cultural problem is that now we get to look at the good side and forget to understand that there's always a pattern and always a cycle to those good things, and bad things are really happening in the market. So bad habits happen. We see people becoming prophets. We see people talking like financial experts about listing, even buying Dangote stock like Makara. And the problem we are seeing, Carl, like rightly said, if you look at Dangote refinery, for example, it's not a growth stock. Now, the problem Dangote has, three problems Dangote has is that in the eyes of the international world, yes, he is a very popular person. There's hardly nobody in corporate finance globally that doesn't know Dangote. But when you talk about his positioning his business in right quarters, he has a problem there. And I think he started fixing that because I saw him in Norway. I saw the fact that rumors says that Qatar Sovereign Fund has interest. Rumors says that the world's largest pension fund is going to invest in that, which is positive. But the problem is that, the fact that it's not going to list in the UK or in the US, some experts are saying that that's probably because there's going to be corporate governance issues. Because if a business like Dangote Refinery that has a valuation, aiming for a valuation of about $50 billion, one would expect you to list in a market that has a $77 trillion valuation. I'm talking of US stock market because that is the bread and butter of liquidity. Those guys have the most liquid hedge fund managers, underwriters you can never speak about. So why is it not listing in US? Why is it not listing in the UK? You now have to look at the critical view that
why
maybe because of the floating formula. You see, I was speaking with some of my friends and they were like, see, I understand what you are saying, that Dangote might not, Dangote is a utility stock, that he might not double like the way he should, but the way he has positioned, the way he's going to position, because look at the holdings, Carlo, 7.5%, NNPCL owes that. He's doing a private placement. Rumor says about $2 billion. So if you look at that valuation, maybe he's selling maybe roughly 2 to 3%. So at the end of the day, maybe he's going to have about 7.5%. So people are saying that still at that, it's still easy for him to move the stock. Unlike if it was floated maybe at 60 or 70%. So while we have to be careful, because they were telling me that why I have to be careful about the fact that I'm looking at it from the whole holistic view of the stock composition. Nigerian stock market has been alleged to be an open playing field for manipulation, because I remember I was arguing with Dr. Brown when he was speaking about, I was mentioning that the US is a liquid place, but we still have illiquid stocks in the US stock market. And she came back to Nigeria and she said that Dangote stock is liquid. And I was like, no, Dangote stock is not liquid, man. because I recall that I had large positions in Dangote Cement, and I have been trading in the market as far back as Nigerian stock market, as far back as 2009. I have never sold Dangote stock at once. I have never. And I'm not a blue chip investor that said I'm holding billions, So the reason is because, the stock is not so liquid, and it's easy for that majority owner to influence the price. So they are saying that it's possible that Dangote stock, based on the fact that the total amount that will be open to the market will be so little, it can be influenced. But I would still say that, you have to also look at the fundamentals, the size of our market.
Yeah.
The Nigerian stock market is 160 trillion. If you do that, the mathematical part, it means that Dangote will take almost more than a third or close to a half of the stock market, depending on when it lists the market. Now, if you look at our daily trading volume, market makers, our investment bank portfolio, it's minute. And I think that's why he realized that, and that's why he's going outside. So for foreign investors, my fear is that, except it's going for sovereign funds who have a long bet, like the Norwegian pension fund, who have the long bet on stocks, if it's going for FPIs, we might point you to so many problems. So retail investors need to understand the risk. Like, the refinery business is not a high margin business like metal stock, where you see margins of 38 to 45%. If you are seeing that in Dangote refinery when it's coming, it's going to be a problem for Nigerians, because it means that the cost of PMS is highly overpriced, and that also has a regulatory. So he's caught between three fires. First of all, he can't come out with so much high margins. He can't. He can do that with fertilizers. He can go away with that because he thought that goes to the United States market. He goes abroad. He can get it, but petrol is a very sensitive thing in the Nigerian economy. And also, he also needs to also look at the fact that our market is not that liquid. So how are you going to execute such campaign in and the regulatory risk I'm so concerned about is where people don't understand that, see, buying Dangote refinery like Akara will put you so much in trouble, because you need to understand that even if you get exposed to that stock, you need to buy with the right registrar, right brokerage firm, execution. All these things have to come in play. If you go through just anyone, you get scammed or you get into trouble, that also could bring legal issues and cast a cloud on that. I think people are not looking at that. People are just looking at the fact that the interest of Dangote refinery is so exciting. And another thing again is that people need to understand that this is not a GT stock. This is not a Zenith bank. Like you said, this is a proper utility company. The risk the reason why we are so excited about Dangote refinery is what is happening in the Middle East and crude oil prices. And we expect at some point crude oil prices to moderate back below $80 per barrel.
Yeah.
Now the question is, why did Shell, ExxonMobil, Chevron, Total, BP sell their refineries? Because refineries are low margin businesses. That is the bread and butter for. So that's the textbook knowledge for an average oil expert in the financial market.
Okay.
They know that refineries. So for Dangote to say is increasing its capacity to 1.4 million barrels, and there are things he's saying. He's moving more on volume. It tells you that Baba is
that the margins are not. The margins are getting compressed.
The margins are not exactly. He's aware of the future risk, so he's trying to make it more of a volume business. So I think those are things that you are doing here, that you are enlightening people, because people just talk about Dangote and I'm just like, are you guys weighing the risk? Because anybody I speak with, they're like, oh, I'm trying to. Someone was going to tell me he's going to sell his house and put it in the business.
And
I was like, guy,
don't.
I was like, guy, I remember BlackBerry. Thank God for the fact that BlackBerry taught me a humble lesson. Because at that time, Obama was using BlackBerry.
Yes.
And I just said, you know what? I can't be wrong with BlackBerry. And all my earnings then, I just put it in. And that stock humbled me. And I learned something that in the world of finance, there's nothing that is absolute. Only God is absolute.
Okay.
If I be saying Dangote here, that the fact that, okay, there's no threat to Dangote refinery, we are...
Before
I drop the mic, we also need to understand the risk with Dangote refinery also globally. In France, for example, in the next 30 years, fossil cars will be banned in the city, in Paris. So a lot of European countries are planning this green. The only thing that delayed it was President Trump removal of all those green policies, but it's still not going to go on that. So there are risks in fossils that people need to also amplify. So I think there are a lot of conversations around this things, and I feel like we've not spoken enough on it.
Yeah, and I want to get some guys to speak, but I just want to make sure that Olumide, just to be clear, right? Because if I just hop into the space, I think you've given a very, very, should I use the word bearish take on Dangote? Are there any bullish takes on Dangote? Before I bring you folks, I'll ask you a question.
I don't think, so to be honest with you, for me, I'm going to buy Dangote refinery. I never hit my bias on that. I'm not going to buy like a blind man or like the average Nigerian on social media that thinks Dangote is the next Google. No, I don't agree with that. Okay. Because you need to also be objective when you are investing. You need to look at the parameters. What are investment banks telling you? What is the market price? At the valuation of $50 billion, I think for me is a bit pricey. It was maybe 30 or something. Now maybe I'll have increased more. But if I see anything above 40, I become a bit picky, because I'm looking at futuristic. Are you telling me that Dangote will be 400 billion in next decade? Is that what you are telling me? Exactly. I remember when I invested in Google, for example. I remember when I invested in Google, for example, close to after his IPO. I knew how much I understood why Google could do that. But you see, we also need to understand some basic mathematical models. How do alpha generate? What makes alpha generate in the market? And in markets like Dangote refinery, this 50 billion Nigerian stock market, understanding the size of our investment industry, and you look at the parameters involved around commodities, you have to be very realistic. We could be wrong at the end of the day, right? Yeah. But you need to also understand that historically, it's easier for Anthropic at that $1 trillion valuation to even outperform Dangote at 50 billion.
We're coming there. And this is the point, Olumide, that once Dangote is this large and paying in dollars, you have to compare Dangote to Anthropic, OpenAI, and not just Zenith Bank or UBA, all things being equal. I hear what you're saying, Olumide. I completely hear you. Don't go anywhere. Let's get some foods I've been waiting. I got Chizo. I've got Cyrus is here. Chizo, Chizo 1, 2, 3. Go real quick with your question. For Olumide, go ahead. Chizo's not here. Let's do Ifrex trading, and then Ifrex, go ahead. Are they hearing me? Ifrex is not here. Cyrus.
Yes, I hear you.
Yes.
I hear you.
Yeah, Cyrus. Hi. Let me do Cyrus for. I've got to my next slide.
Cyrus. Hi, Carl. Good evening, everyone.
How are you doing?
Yeah, I'm very well. Very wonderful take, and it's also good to put things in perspective. All the old social frenzy out there. Dangote is a very big player in the space. I remember when Dangote Cement, was listed. They used to report, Nigeria, NGS companies like listed companies, and Dangote Cement. That was how big it is, and given recent reports also that the Dangote refinery might be the biggest company by market valuation in Nigeria Stock Exchange if is listed before the end of the year. I don't know if that would go. Yeah, but I heard that they are targeting
it's its own sector, Cyrus. It's so big, it's going to have to be its own sector, because any sector you put it into will just skew that sector. If you put it into industrials, it will skew it. So should they just create a new sector and just call it?
I think it should be the oil and gas industry.
It will skew it out completely. That means that
there's some, but in terms of, I would like to say operational model, right? There are some other companies like Seplat and Ayadel who also function in that space, although Dangote is more downstream than the other guys. Of course, but also have some chain in the upstream, provided that it follow up in his plan to wrap up its production in the upstream with oil well. So there are some, I would say there are some similarities there, but in terms of valuation, you are very, very correct that, I think Ayadel is about 4 billion or so. I'm not sure, the last time I checked about 4 billion. I think Seplat is around that price, and Dangote, even at face value, is more than $20 billion, and they are report that the IPO could be as high as 40 billion.
Yeah.
And there's also the issue of like cross Africa listing.
Yeah.
Right. So last time I was away from the media space for like 3 weeks now, but it's something I've been following for a while before then. That it's going to list, in Kenya, in I think South Africa, maybe one other African country also, right?
Yeah. Cyrus, I'm losing you.
I think they have a trade arm in London, right? Which Dangote has like a trading arm in London, which could also help list in the United Kingdom. So I don't know how it's going to work out. Dangote has always been very he has always based on precedent, he has always slow work when it comes to things like. So he always takes his time. Because the time he said that Q1 2026. Q4 2025 they'll be listed, Q1 2026 they'll be listed, and 19 September. So I'm saying maybe people should maybe hold their horses yet, but probably it's going to do that. It's most likely inevitable.
I mean,
like Olumide said, go ahead. Please.
No, go ahead. I was just saying, if you were him, you would list now when the hammer is hot, when there's hormones, when there's interest on you. You would go now. You wouldn't wait.
But those are not the only, I think, considerations for him. Right, some other considerations for him is also like finding the the balance, right? For now, Dangote has been fighting, that's the word, of fighting with the regulatory body, with the government, with the NPC and whatnot. So probably that might occupy his own consideration than just the whole almost thing and taking advantage of the hike in oil price. So you may be looking at other fundamentals in the
but Cyrus, let me get to this real with you. Cyrus, Olumide said that at 40-50 billion he starts to get worried, and he made a good point there. Are we saying that Dangote will be 400 billion in 10 years, a refinery? So for you, what makes you comfortable? What valuation for Dangote makes you comfortable? Below 40?
Well, it's going to be up to so many things. Market fundamental number one, FOMO number two, right? Investment rush, and Dangote is own heavyweight as a heavyweight power in the in the economic space in Africa. All of those things are going to come to play. Probably people are going to overprice it at first, and maybe later it's going to settle at maybe 30 billion or so. Right now is targeting the 40 billion valuation. Probably the people might rush that, and maybe later the whole thing may stabilize and people lose money. So that might be like the way to go for now. But in terms of that valuation, of course, we look at other things. Also, the other aspect is also the future projection of expansion. Dangote is saying it's going to increase its capacity to 1.4 million barrel per day, and start supplying other African countries at Nigeria. So that might also come into consideration, in things like that. So I want to say something.
Yeah, let me go for it.
I just wanted to add up to my own pessimism has even been amplified by what Cyrus said. Because to be honest with you, I think people that are talking about these things, like, let's be honest, are not actively in Nigerian stock market. See, what made Dangote, I write a lot about Dangote, and I'm bullish about Dangote. Don't take the fact that these are the most successful entrepreneurs in Africa. For someone to be worth $36 billion in one of the poorest countries in the world is not a small feat. But you also need to also look at the fundamentals in our stock market. Now, if you trade the market, for example, what is moving Dangote cement? What is our trading size? Now, where is the money coming from? The pension fund, the old Nigerian pension fund is the last time I checked, about 23 trillion.
20 trillion.
Now, the exposure in the stock market is less than 5.5.
They can't do more than 5 or 10 or something like that.
Let us even say, even with I won't give them. Let us even add more. Now, another place where there's a lot of money, which is unlikely that will come, is Stanbic's money market, which is at 3.2 trillion last time I checked. Now, the reason why I'm bringing out these numbers for you is to look at the liquidity problem in Nigeria. See, one of the things many people will tell me is that, if liquidity is really in our market, some of these valuations will bust. And I totally agree, because, sometimes, if you look at GT and let's be honest, look at GT, Zenith, UP, and Access, if these stocks were not so floated, but floated like Bua Cement or Dangote Cement, I'll tell you for free, GT would have clocked 30 trillion naira.
So let me just explain that point. Explain that point.
The reason why I'm saying that is that GT is so Despite the fact that GT, Zenith, UP, they have strong fundamentals in the Nigerian economy. They are highly liquid. It makes their stock quite difficult to push to that point. So I'm saying that the only reason why people can say they are going to bet that Dangote is because of our market, but that is going to be it has.
Olumide, you're not saying anything well. I want you to explain. Let me explain what Olumide is saying. That Bua Foods, for instance, has a very, very low float. What that means that out of say 100 shares, only about 5 are being traded. So even if you want to buy the stock, you can't find it. So like demand and supply, the share is high because there's no float. So let me say same thing with Dangote. He's going to float very little, and the share price is going to be up there because of scarcity. But if you look at GT shares are everywhere in quotes, right? So because they're everywhere, it's harder to.
Yeah, so can look at the good side now. Now, if it's going to do cross listing, this is where disadvantage is now. When you're in South Africa in a market that has a valuation of more than $1 trillion. And you look at the fact that their market making processes are quite more efficient, and you look at where it's going to list, well, because see, you have to look at the bad side. There's going to be a bubble, there's going to be a bust, there's going to be a bearish market. Okay. There's always going to be that. And when history has shown that a market that is poorly efficient suffers most when the bearish, because there's what we call gaps. You see gap pricing, and it's going to happen. So I think we should look at all those concerns, because people, for example, most people going to buy into Dangote's refinery, they look like first-time investors. Because if you look at some of the people that invest, it's not that they don't like Dangote refinery, don't get me wrong. It's not that they don't believe in the stock, don't get me wrong. It's not that they don't, but they'll tell you that the conditions, because why is it that Dangote said he's going to list in March, he moved it to June, he moved it now to September? Why is it that he said he was going to list in London, and he stopped this mentioning London? Now he's talking about listing producing in Africa. You have to ask questions. Look at the investment banks. Look at Anthropic, for example. Look at OpenAI. Look at SpaceX. I can tell you for free, the underwriters, the investment bankers, how these things have been. Even if they've been doing delays, you could see a pattern. Now, in the case of Dangote, yes, we understand, but I think his biggest worry is that he's betting on Nigeria like the way Saudi Aramco bet on the Saudi stock exchange. The difference between the Saudi stock exchange and the Nigerian stock exchange is that Saudi Aramco is a state-owned company. Dangote is a private business. The NGX liquidity is much lower than what you have in Saudi Arabia. So if you are going to make that short, like how Saudi Arabia, you have to have liquidity. And the question now is, where are you going to get liquidity?
Okay.
Most of our richest men in Nigeria are not that liquid. Now, if you look at what's the name of this guy in Google, the Sergey Brin. If you look at Sergey Brin, he's worth over 300, but this guy can call $30 to $40 billion cash, according to Bloomberg data. We don't have that. The most liquid Nigeria is Dangote, and his liquidity is about $777 million. That's based on dividends.
Olumide is saying liquid, or not well. So before you attack him,
we don't have any Nigerian. We don't have any Nigeria even quarter as liquid as Dangote.
Gotcha.
So either the government, you are now saying that either government comes into and says, okay, they're going to buy through the stock, they're going to buy through the market. And right now, it doesn't look like Nigeria is making so much money. So maybe we're going to get debt for that. So these are questions we need to ask ourselves. Where is the liquidity going to come from? And that's why Dangote did a smart thing to travel around the world to raise their $2 billion in private placement.
Lumde and Cyrus, let's introduce something else to this conversation. Let's talk about the other side. Will it burn my cash? If you look at that, I just shared on Twitter this chart. What I did was to take the 4 largest IPO, but the most prominent IPOs Nigeria has done. Note, most of these IPOs were IPO by introduction. So we did Dangote Cement, Seplat, MTN, and of course Zenith. We went way back. And then we asked the data guys, hey, what was the nominal return? What was the real return? So nominal, we killed it out of the park. If you look at Dangote Cement, nominal, about 774%. If you add dividends, about 1,000%. Seplat 2,500% if you just do nominal return. MTN 1,000 if you're investing dividends. Zenith Bank 1,500 if you're investing dividends. So IPOs make money for Nigerians nominally, which means if we don't take in inflation, we just say we invested ₦1 million, what would you get out? They make a lot of money for Nigerians. But when you now plug in inflation, look at the numbers. You and Cyrus, look at the numbers. 4x for Dangote, Seplat 5, MTN 5x. This is if you're investing dividends. If you're not reinvesting your dividends, inflation just takes everything away. So one thing I want to say that if Dangote is going to pay, and this is because it's Naira, if this was in dollars, then this nominal and the real, the gap will not be that large. If you get my point. Zenith Bank is paying you 1,500% return nominally. But when you now look at the Naira, the inflation, it just wipes that all away. You're back to about 1.5, 2.5 return, i.e. times your principal. So what's your take on that? Even if what we're saying is true, if FOMO comes in and we're able to get dollars from this guy, what's your take? Do you?
No, to be honest with you, I think some people are investing in Dangote because of the ability to receive dollar dividends. Just like I highlighted, if you look at Zeblat, I think Zeblat was one of the most successful stories of Nigerian companies, because when they listed, the stock was below 500 naira. And if you look at the time we speak now, and look at in the UK stock exchange, growth, dividend, yes, it has not done so bad. And the company has one of the best corporate governance in the Nigerian oil and gas industry. Then with the inclusion of Tony Dumi as director, that has amplified the run of the stock. But coming back to Dangote Refinery, to be fair, I think I'm optimistic that dollar, in terms of dollar return, you get much better than keeping your money in the dollar mutual fund, where you get 6 to 8%.
Wow.
I'm expecting that. Yeah, you get 6 to 8% in Nigeria. I'm expecting that.
You are saying you better to put your money there than Dangote.
No, personally, that's where I'm taking, because I'm looking at why am I keeping my money in the French treasury market. I'm getting less than 2.5%, and in the US dollar market, where I'll get even 6 points in Nigeria and less than 6 points in the US. So why don't I look at that? Okay, what's the worst bet I'll get? That is my concern. My only concern is that, in terms of dividend, Dangote has shown that they have a dividend payment. But it is the problem we're having is the stock listing, the price is going to list, and how these corporate governance issues, because you see, it's not going to just be him now. You need to understand there are powerful interests. NNPCL's interest is there, and are you not surprised that NNPC has 7.5 interest and is still taking Dangote to court? It tells you that they have a friend-enemy relationship, and we are going to have powerful funds in Dangote Refinery. So the level of accountability will be amplified. So there are a lot of interest. We have to look at that, and we also need to look at the crude oil prices in the next decade. If you look at crude oil future in the next decade, I'm bearish. In the next century, I'm super bearish, because the world is moving away from fossils. We have to be real. The reason why we are celebrating this is that we are highly backward as a country, because if you look at the fact of industrialization, for example, in France, they use most of their electricity is generated from nuclear energy. In the US, for example, they've been able to intertwine wind, gas, shell, and fossils. So it is only in Nigeria that we are super addicted to just one source for energy, despite the fact that we have gas. So I think in the long run, I think people will now start looking at logic, and that's where the investment bankers need to, because most of the investment bankers on the streets, it's just like as if they are campaigning for Dangote just to get a fair share of course. They are not really telling investors the things they need to look at and the risk that is involved.
Cyrus, what's your take? I mean, we've done the IPO. I'm not comparing this with Dangote. Dangote is a monster. Dangote, Seplat, MTN. If you look at nominal, very, very high. If you look at with dividends, real returns, very, very low. If you add dividends, it gets better. Is there something to be said that if Dangote is paying Nigerians a dividend in dollar, then he eliminates that nominal, real dichotomy, and this becomes, quote unquote, a cash machine for Nigerians that are suffering with Naira dividends?
You not eliminate per se, I would say. It's more like it reduces the exposure to inflationary risk. That's the the big part, not like it eliminate it, or even if you get your dividends in dollar, you still have to come into the real market and purchase things, and all other factors to come into place. But even I think, like, when you're compounding, for example, like you're bringing you're reinvesting your dividends, because most people in the stock market, unlike maybe you are doing treasury bills or commercial or whatever, those ones are like more of the long-term investors, right? Most of the conversations that you see on social media, they don't really resonate with people who are actually real investors, right? Lumide was saying something the other time about liquidity, right? And I don't think Dangote, in terms of people who are going to invest in the stock, is targeting, like, he politically speaking, is saying that every common Nigerian will be able to participate in the in the stock. But see, here's someone like, for example, Otedola saying that he's going to invest $100 million, right? I think that recently he's going to invest $100 million in Dangote. Those are the kind of people that are going to like put long-term funding, and many of those people don't care, for like short-term gain. And most time, even when they get their dividends, they reinvest it, and it compound, and kind of like de-risk the factor of the nominal returns. But another thing I would like to say that I think is being missed is that you have to look at Dangote also from the part of what kind of asset it is, right? It's more of an energy infrastructure asset. I was following these about few months ago, maybe about 3 months ago now, this Kenya IPO of their pipeline, right, that goes to all East African countries and supply, fuel to East African, and they raised about $800 million. That's like the highest, IPO they've done since I think Safaricom also. And one of their main shareholder, one of their main investors was Uganda. So Uganda bought about 20% of the assets, right? So I feel like Dangote being works, and I feel that's why he's slow working the whole thing, by the way, is that there is a huge opportunity for him to have not just like private investors or individuals to participate in it, but also, government-led, equity. So I feel like something like, saying that it's going to have a cross-border Africa, listing. You could also see maybe some government wanting to own a part of the refinery, if after anything, just to have some interest in it. So that might help boost liquidity in a way, right? And so that's some, because we are talking about energy security, and so probably the move is making is have more of a kind of sub-Saharan or Africa energy integration, whereby it becomes a main player, in countries like Cameroon is supplying to Cameroon right now. Countries like Cote d'Ivoire, countries like even Ghana.
It's a lot. It's a lot.
So there's a lot of potential there, and you can't do that kind of thing without some involvement and some kind of interest, right? Knowing that they also have some interest in it, and they can drive certain, movement and policies in their own domestic arena. So probably that might be one of the ways it's going to boost liquidity. Maybe I don't have a crystal ball, I don't know, but so that might be one of the for him going to boost liquidity. So the point I'm trying to make is that his business model is quite different from maybe something like MTN, which is service driven, or Blue or whatnot. It's more of an energy security thing. And if you look at the conversation around, energy security, you see what I'm talking about.
Gotcha.
And lastly, lastly, I also feel like well, there's a point I was trying to make. I just keep. Maybe I'll come back to it. Then I'll come back. So the back to your question, So if the compounding effect would also help de-risk the old inflationary pressure on dividends, that those who are more of a long-term investor, you don't go into a very less floated stock like Dangote and many other Nigerian stuff like that are in that space, like we mentioned point, like without having a long-term game in mind. You don't just want to like catch in and cash out. You're going to get burnt, particularly in a volatile environment like our.
All right. Okay, let me get Jay. Jay has been waiting. Jay, you got a question for Lumide and Sarah here. We're talking Dangote, if it's going to make you money or burn your cash. I think number one, I think it's going to make money. But Will that be nominal or real? Is what I'm trying to get Lumdia and Cyrus to let me know. Jay, but go ahead.
Hey, good evening, Mr. Kavula. Hey. Good evening to Mr. Lumdia and Cyrus. Well, Mr. Hall, quite skeptical. I will tell you why. We're still producing between is it 1.5 to 1.6 million barrels?
Just call it 1.5, yeah. Mm-hmm. Oh, yeah.
Yeah,
mm-hmm.
Yeah, 1.5 will be our 1.5. The thing is, the problem is that energy policies are changing more, right? And like Olumi just said, we are seeing a gradual shift from fossil fuel to renewables. So I'm looking at long term. I did see the podcast they did with the CEO of the Norwegian Sovereign Wealth Fund, and I can't think that the Norwegians will probably invest in something like that. Well, like Olumi said, I'm looking at long term. I'm quite skeptical, to be honest, because the volume that will be available for trading to the general public, I think it's rather minute, to be honest. It's really rather minute. So,
well, isn't that good for you? If the volume is minute, then your share price is going to go up faster. That's one way of making a large company share go up. You reduce the supply.
Yes. There's a fair point on that. Well, me personally, I'm looking at long term. I'm looking at long term. Yeah, I don't want to just go with because it feels like as if it's like some sort of nationalist swan song. Oh yeah.
Okay, but let me take you up on that. So I mean, I have three ways I look at to buy a company. Number one is the company itself, the fundamentals itself. Do they make sense? So return on equity, return on assets, dividend yield. I think on the fundamentals, the Dangote refinery, I think would have positive numbers because it's selling an elastic product. It's going to sell that product from a new refinery. So that means you have to buy fuel now, you have to buy fertilizer, or you have to buy aviation fuel. It's not like you can say, I'm not going to buy and I'll still fly. You have to buy. That's number one. Then when you leave the fundamentals, you go to the market. You then say, is that company in that market? How dominant is that company in that market? I would say Dangote is a dominant player. I mean, they've been accused of being a monopoly by the former monopoly. How do you know you're a monopoly? The former monopoly says you're a monopoly. So NNPC is now saying Dangote is a monopoly. So they have market reach and control. So number one, their fundamentals are good. Number two, the company has market control. Number three is that market they have to control over. Is that market going to expand? Olumide said in France, they're going to start to slow down on internal combustion engines, same way across the world. But in Nigeria, we are talking CNG, but we're still going to use diesel. We're still going to use aviation fuel. We're still going to use fertilizer. We're still going to use detergents. All the stuff Dangote is making is still going to be made and used in Nigeria. So on 1, 2, 3, Dangote refinery scores. Remember, it's a refinery and a petrochemical plant together. So I think it's either way, that's what I think, Jay.
Well, sorry. So just to conclude on the matter, I think you gave a very good take on that. And the reason why you gave a balanced take, I said it's a good take, was that you gave a balanced perspective of people to look at the positivity around it. I don't think, the question here, I think we diverted much from the headline, was Dangote going to make you rich or borrow your cash? To be honest with you, as a middle-class Nigerian, I would say that I don't think Dangote will make me rich. As it's like someone like Femi that will get, because Femi is going to buy the stock cheaper than most of us, because this is private placement. They're going to get much better deal than many of us on the street. Then you also need to be objective at what percentage, what return, what ROI are you looking at? Are you looking at Google's ROI? Then you must be dreaming. Are you looking at GT's ROI? Then you must be in dreamland. We have to be honest with our expectations. That's the argument, And burn your cash, it depends on where and how you buy it. If you buy it with scammers, definitely you burn your cash. You buy it with the honest stockbrokers, definitely you have a lot of crying to do.
Okay.
if you buy it on social media, definitely you'll be in soup, So I think what people need to understand is that there is no second option buying such a company on a listed on SEC-listed platforms or brokerage services. Whether those ones are banks, because even banks that are some banks that are offering it, they're doing that through their investment banks. But I get surprised when some betting companies or fintechs that are known to promote sport bets and things are also campaigning for Dangote cement. Then it gives you a problem of with that, should that happen? And why are investment bankers keeping on that, or why are broking firms keeping mute on that? Because it did not happen in America. For example, saying DraftKings is going to release SpaceX cargo. What will happen? What will happen if you hear DraftKings in the US, a betting platform saying they're going to release SpaceX in June? You know what will happen? So these are questions I think that we should talk about.
Gotcha. Let me bring Mr. Ayodeji in. Mr. Ayodeji, boy, he's been a guest here before. Let's get his insight. Mr. Ayo, hi, good day, sir.
Yeah, my boss. Yeah, good evening, sir, and my brother. They always enjoy your perspective. So, I would just want to. That's regarding the offer. Or maybe let me start with the long-term demand. So there's something that it's also becoming more evident now that the rising AI infrastructure now will require significant energy to push it. And that there's a limit to which renewable energy can sustain that move. So when you look at the rising demand in energy even in the US now, compared to China was leading before, but now in the US, they're also trying to catch up. Don't you think that it may elongate the demand for fossil fuel? Sorry, I did my PhD studies around this, and it's always an interesting topic.
I mean, even in the US, even in the US, that they are saying green. For fossil fuels, coal is still used as the backup power for the solar, for the wind, even for the gas. Texas had that big issue a few years ago where they had a cold spell and everything went dead, and all that. So you need oil to oil the wind veins, the wind power veins that are all over the plot. China is still building coal powered plants. Indonesia is still building coal powered plants. I don't think it's going anywhere. But I think AI is using gas more.
It's not petrol.
Yeah,
AI is not using petrol.
Yeah, they're using gas. Yeah.
AI is not using. Yeah, I understand what the doctor was saying, but to be honest with you, that AI argument, I'm a bit skeptical about it personally, because if you look at what the Europeans are looking at now, for example, like you've seen how the Germans have suffered over their heavy reliance on gas from the Russians. So unlike America, where America has so many options, if you look at Americans, for example, they'll tell you that the shell gas and the gas, and if you look at Google's investments recently, Google and Facebook, they're investing in nuclear. They're going nuclear because, while we are even talking about fossils, they've realized that it's much more, from a business perspective, it's much more profitable to run your business on nuclear than fossil. That's why you see Google investing billions of dollars in nuclear energy.
Can I say something?
Go ahead.
Okay.
Yeah, gas is also a form of fossil, by the way. So it's an extraction from fossil fuel. It's not outside of fossil.
Yeah. But that clean fossil. But I'm not even talking about gas here. I'm even talking about the fact that we are seeing high increase in nuclear energy. The only bullish, why I'm very concerned about we not talking about Dangote's weakness here is that what is Dangote really producing here? Petrol. I think the major strength of
really petrol
is the fertilizer. Petrol, jet fuel. No, the refinery.
The petrochemical, right?
It has a different entity. I think the petrochemical is separate. Because if you look at this, he didn't put that
yes,
together.
the petrochemical is separate.
It's separate. For me, Kalu, I think the petrochemical is the crown jewel. In fact, if I'm going to invest $1 in Dangote, I will invest $20 in the petrochemical. And I'll tell you for free, because even just looking at the detergent, looking at the US market, and looking at disruption in the Middle East, I think if we are talking about margins then and cash flows, I think the petrochemicals make far a lot of sense.
So just to be clear, so let me just be clear. So the offer doesn't include the petrochemicals.
Yeah.
No, it doesn't include it. It was planning to also list that separately, because you see the fact if you visit, they are separate. And I agree with Olumide, even based on the talk that did there, that the fertilizer fund, which is petrochemical, gives more cash. But where I will wrap up this is that I feel that there's still long-term value for Dangote refinery. I know the interest. I've never seen this interest in my experience in the market before. People don't want to even care whether it will burn cash, whether it will make them. People just believe that it's like a silver bullet.
Exactly.
In Dangote, then I'm automatically rich. Sometimes you want to liken it to look at Aramco, and what they do. Yes, that's a foreign company, but over time, it's a business that you can also see that the margin. So by the time we begin to also see the numbers, Dangote is always going into business with higher margin, and that would also be that consistency across most of the business they have handled. So that is also like a positive. So the way I view it is I'm also going to invest in it. I feel that investing in long term, I'm not expecting it to perform magic in the immediate like a lot of investors think. I know that a lot of investors will be selling down on even their good stocks to go into Dangote. A lot of people, I know people that are ready to terminate all their big things from to go into Dangote.
Wow.
I feel that there's a bit of caution. Stock is stock. Even if the stock is very good, there's the overall sentiment. You saw what happened in the Iran war. That's a lot of companies, even when they are very good, but eventually the overall market sentiment would impact, would still impact. So that's in its that on its own should be a culture. So that's where I would just put it. It's a good stuff to add to your portfolio, but don't be concentration is always a risk. So if you think that it's only down binary,
looks like we lost him. I was going to ask him his idea of dividend yield, but thank God we got Larry here. Larry OLB. Larry, sir, how you doing, Oga? I'm loyal.
Carlo, how now?
I'm doing very well. We lost stock, yeah. What's your take? I mean, we're talking just extracting Dangote, no good or bad. We're just trying to look behind the numbers and see if this is actually the one-time silver bullets, once in a lifetime offer, or this is just going to be too priced in that we get in. There's a capital trap. What's your take?
Carlo, thanks, and well done on all these spaces you do, and this further helps with education and stuff. So, I can't say much, Carlo. I probably know why, but there were just a few comments that was made earlier. I'm just trying to provide some correction to. It is a petrochemical plant. I know the refinery is kind of the buzzword, is what's sexy. It's more than a refinery. And at some point, right before the IPO, there'll be information in the public space. And people get clarity. Like any investments, people need to understand the risk and evaluate it as much as they can before they make their investments. But it's not just a refinery, it's a petrochemical plant. Does petroleum products, so your PMS, your jet fuel, your diesel, your kerosene, but there's some high margin chemical products is good to be producing. One in particular is linear alkyl benzoate, LAB, which is a key component in detergents. There's no one in Africa who's making that. And what's interesting about that is the feedstock for that particular product is kerosene. So they're making kerosene, and kerosene is also the feedstock, or it's kind of like a key element in jet fuel. So from a margin perspective, these are high margin products. When you do see the numbers, and I've seen people do comparison to US refineries, what you see in Europe or in India, the EBITDA margin of a regular refinery is around 8-9%. This company is doing double-digit EBITDA margins. And people will say, okay, Iran, the models we've seen post-Iran, is still going to be printing that kind of margins. One, it has a captive audience or captive market in Nigeria and Africa overall. And he's exporting. So he's able to squeeze out those margins. And I think this is something, again, once information become public, people have the opportunity to evaluate it and make the decisions. But I just want to just correct the issue around it's a refinery, it's a petrochemical plant, it's a petrochemical plant. The fertilizer business is a completely different business. That's not part of this. That's on its own, and that might even be listed later in the future. And I think when people are evaluating this business, they need to look at it from a petrochemical standpoint and looking at comps that have that type of business, not just a refinery. And I think people probably understand the valuation. I can't speak too much about it. There's so many numbers out there. We have a view. The owner of the business he spent about 23 billion, right, to build this thing. So from a replacement cost, that's your floor. He's looking to double or more than double capacity in less than 24 months. So we need to look at it that if it costs 20-something billion to build 650,000 barrels per day, in 24 months, it's going to be 1.4 million barrels per day, right? Largest single site capacity in the world. Then people need to just do the math correctly. I'm not going to say what the valuation is, but it's from a floor. A replacement value perspective, you need 23 billion, and this was built 2-3 years ago. So that 23 billion might not be 23 billion today. Plus or minus inflation and whatnot. So I will pause here. I'll continue to listen, but I just want to
Larry, before you go real quick, right? Just in terms of the dividends, right? Is it really true, this dollar dividend, number one? Do you have a range for that dividend, i.e. dividend yield? Maybe we can work with the yield, not even the amount. Do you have something for that?
So the promoter has come out public to say, there'll be opportunity to earn dividends in dollars. The business is 100% dollars. It's not, the P&L is in dollars, the balance is in dollars. So it has the cash flow to pay dollar dividend. I think we have Seplat, we have Airtel, the two companies who pay dollars, and I understand it's because they're foreign listed. There's some work being done to talk to regulators to make this happen. But I'll say one thing from a dollar dividend perspective, right? So if you're someone who's investing billions of naira in shares, receiving a dollar dividend makes sense. But imagine someone bought 10,000 naira worth of the shares and the dividend comes out to 2 cents. Makes no sense to collect that in dollars, right? Collect that in naira. And so all that's being worked on. In terms of yield and whatnot, if you look at Dangote, his companies as listed, right? And look at the dividend payout. I think Dangote Cement is probably 80%, 7% dividend payout. Sugar, when they used to pay dividend, was paying that high. And all his businesses, there's something very similar, right? He holds at least 80%, 75, 80% of those shares. So he wants to pay himself a good dividend. Now, people shouldn't expect that kind of a dividend payout early on because it's still expanding. So there's capex, there's all kinds of needs for cash. So you might not start off with a high dividend payout ratio, but at some points when, it could be 4 or 5 years from now, when business is steady, there's no major expansion going on, I don't see why he's not paying 70%, 80% of net income in dividend going forward. So can't give you a yield perspective, but from a payout, looking at his history in other companies, we can infer that at some point he'd be paying circa 70, 80% of profits as dividends going forward in the future.
Interesting. Thank you so much for that background. Really illuminating. Just Mr. Ayo and Olumide, Cyrus, you've had.
Thanks, Ogalari. What is?
Say why? Well done.
Yeah. course, I'm fine. Yeah, so I think, yes, the very perspective is really very valid. That mix of what I know it's separate, fertilizer is separate, and it's very correct, petrochemical, because they refine all these petros products, white products or white label products. For it, yes. It's quite very valid, and I think I've learned a lot from that. So I think that large is that you can see that, just know that you're also investing in stock. Let people know it carries the characteristics of a stock. So when you see the valuation, when the prospectus comes out, no, don't liquidate all your fixed income. You are going into it. Understand your risks. I'm not saying that's what you should do, but know the risks.
Yeah.
Don't see it like.
I think because people, this is not going to come out again. Dangote, it's not going to be. Usually, you wait for the IPO to list. You can buy in the secondary market. I doubt you will see this in secondary market. I think that's why people are rushing this IPO like this. People want to get it and keep it, than wait for the secondary market.
But Carla, I feel like if you knew it was going to be a queue, my question is just like, when I speak, because we write on these things a lot. I will speak to many people a lot. And one of the things I hear is that if it's going to be a queue, like, look at OP, for example. Why do you think they are listing in the US, for example? Why didn't you list in the US, for example? Why didn't you list in the UK, for example? There's something interesting about finance, and it's from a place of liquidity and promise. He's a popular person. He knows, like, if you are going to really get in, you want to get the best. But yeah, my bet is that it's also protecting his interest, because if you look at the growth in, I think when I was talking about payouts, he said something that I think people need to look back at. That the reason why his payouts is very high is because most of the stocks are held by him. You understand? If you look at when you are explaining nominal and inflation returns, from investment from an investor perspective. It's not so interesting. Pension funds, the reason many pension funds own many of these stocks are because of dividends. That's the on the NGX pension folks. And the valuation, look at Bloomberg, when it started, they said it was $19 billion. I remember when even you look at the capex, look at the operation and the fact of how he raised money and present valuation, it becomes very contentious to put a very high number on it in a market like Nigeria. Our investment industry is negligible, even when compared to South Africa, much to America. It's negligible. We need to be honest about that. So there is no how you want to tell me that there is more to it than meets the eye for Baba.
You've already said why now. You said why. He wants to keep control.
No, because I want to, I like people to answer the questions themselves. Because, one of the things I've learned in my space is that you know the answers or you guess the answers. You allow people to make the choices themselves. Okay. Because the honest truth is just that the reality is that if he's going to really make a pull, the US and UK should be involved.
Okay.
The reason why they are not involved is that there are things we don't know or things he feels he doesn't want.
I don't think it's a secret. I mean, look at the guy's trajectory. He said he invested in. He was doing this. He was a rice and sugar importer. Then he did a cement entrepreneur, built a factory. He said he sold his cement and invested in refinery. Now, if he's selling refinery, he's paying himself a dividend. He said he wants to go into, is it steel or power? He wants to go into power.
Yeah.
Power is big bucks.
Can you remember how many times Baba said he wanted to use Dangote cement in the UK and he has not done that? Can you remember how many times he said that?
No, I hear you. I'm not saying it's a bad thing. I'm saying it's not a bad thing that he has not.
No, I'm not saying it's bad. No, the question here is that if it's so fantastic, like the way some investment bankers are saying it, because for me, I've written so much and I've seen so much in the market to understand that things said in newspapers are different from things that happen in the market, because they want to sell. They want to sell. Yeah, what are the jobs of investment?
I haven't seen.
They want to sell. They're like agents. They want to sell, right? But the truth of the matter is that we have to look at it holistically. Is that just like Dr. A said that you don't need to look at these things like it's a sure thing. for me, I think it's very valid to be a bit pessimistic despite the opportunities around the space. Yeah, the margins look fair. There's a reason why a lot of us are still. I remember when some of these financial experts on social media spoke about Dangote Cement, that why is Dangote Cement margins higher in Nigeria than in other countries in the world? And I kept quiet about it. But to be fair, these guys were making a lot of sense. Because, can you see, you know why Dangote Refinery is tricky? You see, there are a lot of things that you could get away with cement that it might not with the refinery business. And that's why everybody is waiting to see the margins.
But if
the margins are too high.
If we go back to that, let me look at it this way, right? The way I looked at that argument they were having, if there's a high risk environment, I want to get my money out faster. So my need or my pricing will reflect the fact that I want to get my return on capital faster. If I invest in the US, no one's going to come and chase me out. So I can take my time for 15 years to get my money back. But in Nigeria, look at Dangote built a refinery worth $20 million, and the regulator said it was unlicensed and it was selling substantial products. Is there any country on earth that you can invest 20 billion and regulator will come out and say, even if it is true? So when you say this, there is an international lens to look at in Nigerian company.
Yeah, but can you look at the bad side of Nigeria? But look at the things he has benefited from. Let's be honest, See,
he has invested.
Look at the listing. Look at the listing now, for example. Like, the listing protects him a lot. The listing has protected his valuation to larger
Okay.
And we have to be honest about that, Yes, I understand that we have, from a regulatory perspective, there are issues around that which we are very worried about. But to be fair, Nigeria has made him who he is today. So
and he has made Nigeria. I mean, it's funny. It's funny that since I was born, I read somewhere, I thought only Dangote had a refinery. There are about 30-something refineries that were issued before Dangote. There's a one now being built in Bielsa. There's a refinery being built in Bielsa now, almost smaller in size, but the same sort of structure as what Dangote has. Imagine in Nigeria too. Remember why I put up the macroeconomic indices before we started was to say, imagine Nigeria today without the Dangote refinery. We can't even imagine it. We can't. It's like imagining rice without stew. Or rice without dodo. I mean, we say jokingly, but Nigeria without Dangote refinery today, Naira would have like maybe 5,000.
Remember, I pegged him higher than Cardoso last year, and I remember a lot of people were skeptical about and I said the reason was that you need to understand what Dangote refinery did to the Nigerian economy.
The Dangote effect. I wrote about it and on an article how the Dangote. I said how the stable Naira is fixing, and the Naira is stable because of Dangote. So again, to much, Kennedy said, don't ask what your country do for you. Ask what you can do for your country. Whatever we say about Dangote, as long as the other investors are not stepping up to invest, we have to give him a bit of a leeway. Just my own personal view.
No, you are pro Dangote. You know me on my stance on Dangote, and you know things I've written about Dangote. But to be honest with you, I feel like sometimes when we are not supporters club.
I hear you. No worries. Let's get a few guys
to look at that side. But the other question I want to say before I allow other guys, when Dangote exists, for example, don't you see, Doctor mentioned some things about the fact that a lot of people are now focused on Dangote. Don't you see a shift towards many liquidity towards that stuff? Because some people right now, what they just see is just to sell their holdings and move to Dangote. Don't you think it has a negative effect on the Nigerian stock market?
It will. I mean, when we started, we said the NGX as a whole is going to slow down just by addition of a larger denominator. But also, like Doctor is saying, people are selling their houses, people are selling their shares. People from America are asking me, what's the best way to buy Dangote stocks from America? I haven't seen one person that is telling me I'm not going to buy Dangote. They're either telling me I'll buy small, or one person I won't see that says I'm not going to buy this. It's too. And I tell people, okay, are you going to compare Dangote with Anthropic or with AI? It's still the same. They'll be like, maybe, but I'll buy Dangote. So Dangote is a buy on Nigeria. If you buy Dangote, you are buying Nigeria, right? Before there used to be this NGX, not NGX, MCI, MSCI Nigerian ETF that you could buy that index fund and you got exposed to Nigeria. I think the nearest thing to that now is the Dangote. Not even the BUA is a bit food. It's a bit, there's no moat in food. But the refinery is like, it has a substantial moat around it. Whether Dangote is there or not there, you can't compete really by scale of what that guy has done in Nigeria. He's doing a port now. We've talked about the petrochemicals. We've talked about the fertilizer. Even if it's not one company by incorporation, it's one company by just the ownership and what they are bringing out. That's a massive take to say you're not going to have exposure in your portfolio to that. It's like saying you want to buy America, but you're going to buy Mark 7. Dangote is like Mark 7 in one stock in Nigeria. That's how I look at it. Just Mark 7, if Mark 7 was one company and you took Mark 7 and said, we're going to launch this company in America, that's exactly what Dangote is here. It's difficult to say, Mark 7 is a bit too, I'm not, it's difficult. That's how I'll put it.
The conversation is not, are you going to buy that?
True. Will it make money for you? True.
The conversation now is people need to be aware that it's not absolute.
It's a utility, right?
We are looking at the bad side. Yeah, but it's not that we are not investing in it. I've said it earlier. If you look at my Twitter, I even told my brokers that once the listings are around, they should give me a headshot, So yeah, but the question here is that let people know when you are investing. That's the problem we have in Nigeria. Yeah, like people look at they expect you to just say the good side. No, it doesn't work like that. People need to know.
Let me jump in here, and then Ayo can pick up on this also. There's some work advisors, brokers need to do with their clients. The excitement, we can definitely feel it, but you need to also advise, right? The best way to invest to have a diversified portfolio. I don't know about people selling their houses, but it's you need to just
don't sell your house.
Yeah, so it's a good opportunity. The returns, the way things are looking, yes, there's serious upside here. It's an essential service, right? Just like MTN or anything, that's in our markets. You invest wisely. You don't have to, back up the whole truck. But again, some of us who work in these houses, we have advisors who advise our clients accordingly. The Dangote effect is no different from Elon Musk, right? You see in SpaceX, everything around Elon Musk is this excitement, right? And I might be the most knowledgeable investors buying these things, but we see them day to day. So, you're making a comment about US, UK. Are you saying why is he not listing this company in those markets?
That's what he's asking.
As a firm that I work for, we're always pro Nigeria. We need to develop our markets. We need to deepen our markets. Give you examples of Nigerian companies that have listed offshore. They've not done too well. It's IHS, which has been acquired now by MTN Group, and you have I believe it was Conga or whatever it is that listed in the New York Stock Exchange. So, and you look at Seplat. It's been a success story, but some people can look at Airtel from a domestic investor standpoint. We don't have exposure to that company either. But it's I don't think, at least in the nascent history of these companies, let them list here in Nigeria, let them mature here in Nigeria, let Nigerians benefit from these businesses and these companies, and maybe at some point later in the future. If they take all the boxes for a foreign listing, then fine. By the way, there's strong demand from foreign investors in this IPO. So what are you really trying to gain by listing offshore if the foreign guys are willing to come into our market and take a piece of this business? So not to say foreign listing is bad, but I think we should not over-glorify it as it's the best thing for some companies in Nigeria.
All right, well said. Let me get a few guys I want to speak. I've got Mr. Eric. Cyrus, you want to hop in real quick, then we'll go around the floor. Cyrus, real quick, yeah?
Yeah, sure. So I just want to ask, because when Larry was talking last time, he mentioned something about the valuation of Dangote refinery saying that it's around 23 billion, thereabout, maybe. But it's also something about the average margin in terms of revenue and profit globally, in terms of refineries and what Dangote is doing. I don't know if he has like any kind of access to the figure, of what Dangote is currently doing, because I don't know for sure if they are doing above, whether they are doing double figures, or whether they're even making profit as of now. I don't think maybe that information is available, or is there anyone that like access to that kind of data?
So to clarify, so on the valuation perspective, I said the replacement cost, he's talked about this thing costing him 22 billion to build. So I'm saying if anyone's doing any analysis, that should be your floor. I'm not saying that is the valuation. I'm just saying a baseline number. On the other questions, unfortunately, I don't think I can share, say whatever is done in the public on a forum like this. So I'll be very mindful of what I say. But everything around the business, I mean, we've seen the pension regulator providing waivers allowing PFAs to enter, right? So if they've waived certain, it indicates where the company is now. Is it profitable? I think, once the numbers come out, you will see that. But he's not running his business to be. He's not creating or running his business to be a loss-making entity. And I think if someone has indicated his plans to pay a dividend, rest assured, he's going to deliver a profitable company. But again, at this stage, I'm unable to say anything about numbers and stuff. But I mentioned some other pairs. What you see globally. From a margin perspective, he's doing better than that. I can say as much.
Okay. Can you hear me?
Yeah. Let's get okay, Cyrus, you good with that?
I just wanted to say that the reason why I mentioned that is because such margin also would be part of the consideration, when you are going to an IPO in terms of how you be valued. So if that is not publicly available, I wonder how, the OT will play out. That's what I was going to say.
Gotcha.
Before listening, you'll see the prospectus. I mean, anytime, and IO can speak to this also, when you open a transaction, all the information required for you to evaluate before you invest will be made available. So you have a prospectus, you have, and in the prospectus will speak about the business, about the numbers. You might have an investor presentation in there for you to review.
Well said. Let me get Eric. Right. We'll got Eric, we'll go Vaughn, and Eric, Vaughn, and Chief. So Eric, please go ahead, Eric. Eric Tao, if I got that right. Eric, can you hear me? All right, let's get Vaughn, Mr. Vaughn Oluwatunbi. Vaughn, please go ahead.
Hello. Can you hear me?
Yes, I can, sir. Thank you very much. Welcome to the space for talking about the Dangote refinery IPO. Will it make you rich or burn your cash? Lots of insights has been shared. What's your take?
Okay, well, I don't know. I just want to ask some question. I don't know if I can ask.
Please go ahead.
The question about. Okay, I want to ask that the IPO is it going to be available on apps, maybe like Bamboo? Can you buy from there during this IPO? And also, I would like to ask that is it good to buy during this IPO, or you should wait a little, then till maybe you wait a little and see what the reaction of the market is before you buy? So that's just a question I want to ask.
Let me ask you, Larry, are we going to have this offer on those apps, the registered SEC apps like Bamboo and Shah? Are they going to be there as well?
I mean, you know who I work for, right? So Chapwell is a broker. So listen, it's a public offer, right? Every broker, every licensed broker in Nigeria is allowed to sell this. So what I can say is, if you don't have a brokerage account, you should go and open one now, and then talk to that broker to find a way to get this done for you. Banks are also placement agents. So in our markets, based on SEC rules, they can also distribute. So I can say as much though, this transaction will be 100% digital. 100%. We're not doing paper. We're not doing paper or pen. Digital. So I know the NGX has a digital portal, right? So just through that, either the NGX or through your licensed broker, you should be able to buy this when it does come to market.
Yeah, so I think the answer is yes. You should be able to get it through those alternative, the online apps like Bamboo. You should be able to get it from there. On if you should wait, you know, if you let me just say this right, if you see a pretty girl in the club, right, and there are lots of guys looking at that pretty girl and you want her phone number, do you want to wait till she goes to the parking lot, or do you want to get her number at the club? What's your take, Vaughn? When should you get that number from that lady?
Yes, you get the number.
At least hold the number. Okay, at least hold the number there. You don't have to call, but at least hold the number, Abi.
Okay, yes.
Yeah, okay, let's do it that way. Chief B, please go ahead, sir.
Yes, thank you. I greet everyone, and I greet you, Mr. Kalu. Thanks for the opportunity to speak. Yes, Dangote. Okay, so we're hearing is about 10% minority stake. That's roughly $2 billion. So for me, I'm thinking that this is not even going to be available to the public. It's the big boys that will take everything before you even have the opportunity to say Jack, the big boys. Somewhere like Otedola is already asking for $100 million. Yeah, but it would be nice to know what one is buying into, though. Dangote is known to be an efficient executor, so that's reassuring. The fact that he's able to do the other aspect of the refinery that brings in the other. I think that's the upside. That's where, if I'm buying, that's where I'll be looking for capital appreciation. Otherwise, it's just sideways in the short term because the refinery margins, there's really nothing much you can do about it. I mean, quickly, right? So I just see you buy into it, and things will just be sideways until maybe the expansion comes on stream, or maybe the other investments. So it would be nice to see to know more about what the scope of the IPO is. I think that's what will determine.
What do you mean by scope? What scope?
So what I mean is, the current size of the refinery. So is that what I'm buying, or am I buying into Dangote refinery as an investment, such that if I get an extra 50,000 barrels tomorrow expansion, if I get an extra yield from some other products, it comes into the valuation, and then I get that capital appreciation. You see what I mean? Am I just only buying what is already operating, and then I'm just going to be looking at margins?
Don't make it complicated. You are buying into a company, right? Profit and loss. So you are buying future earnings. You are buying current capex that has already been invested into that company. You are buying future dividend yield. So you are an owner of the company. That's what you're buying. If you buy a share, you own stock in the Dangote refinery. So if the company makes a profit, you have a share of that profit. If they pay a dividend, you get a share of dividend. The assets in the company, you have a stake. You are residual, but you have a stake in those assets. That's essentially what you're buying. If the company folds up tomorrow, God forbid, your equity has also folded up, if you put it that way. So keep it as simple as that. It makes sense for you.
Yeah, Mr. Kalu, what I'm trying to clarify is that, Dangote is talking about, I think, starting a refinery in some African country over there. I mean, does it extend to that place? They're also talking about.
Yeah, it depends on if this company would own that. But so whatever it is, like I'm saying, don't complicate it. You are buying a share of this guy. If tomorrow they own SpaceX, you bought SpaceX, right? So look at the and if you look at I have a speaker. If you look at this space, right, I've shared a lot of slides for you on the templates, snapshots, and all that. I did share a lot of that. I even compared IPO. So that would give you an idea of what you're getting into. 20 billion already invested, debt already in the working capital requirement. That would give you an idea of what you're getting into. Like I said, this is a bet. You are betting on the future of Nigeria. You can't grow Nigeria without diesel, without PMS, without fertilizer, without those petrochemicals. You can't grow Nigeria. So in essence, what you're saying that you want to be a feed, you want to buy into a growth feeder of the country. You remember when people talk about that very, very popular analogy, when they say if there's gold, don't buy gold. Buy the shovels, buy the tents, buy the shoes that are used by those that are making the gold. So a good way for you to get exposure to the largest economy, I would always say that in Africa, is a refinery that is supporting the energy needs of that refinery. If any company is doing well, you can trace that company is doing well with a straight line back to the Dangote refinery in 10 years from today. So even if you are doing services, you are doing Nollywood, you are doing agriculture, you can trace every of those companies singularly back to Dangote refinery. That's a massive statement to make. And if you look at it that way, going back to our tweet, will it make you money? Will it make money now? We don't know, but will it make you money in future? I think it will, definitely, because of just that scale and the importance. That's how I'll answer that. Yeah.
Carl, just on the, is it for us or for the big men? It's for us. So I think it's an opportunity for Nigerians to show that they have capacity to invest in such things.
How much will it be, sir? How much per share will it be? Can we even get an idea? Okay,
it's quite early. I mean, I think again, once that information is available, the public will have it.
$100, $50, $10.
Listen. I think all I can say is that they want every Nigerian to be a part of this.
Interesting.
So they'll figure out a way to make it affordable. So, but in terms of what it will be per share,
okay.
Again, this is not a forum to have that kind of conversation.
And also, I can ask you this, right? There's going to be still that same requirement whereby there's going to be if you apply and you're a small investor, you are given 100%. There's going to be that will also be there, right? So
the history of these type of transactions, and at least has. When Chapel Hill runs these things, there's a preference for retail investors. So they really want as many retail Nigerians to be holders of this, right? And they'll figure out in an oversubscription where they do the proration at. But preference, national. I mean, the SEC, Agama, the DG, and everyone else are very pro retail shareholders. They're very supportive of them. Yeah. And these transactions historically too, it's always been like that.
Okay.
And then they try to find a way to scale things down from the institutional side of things. But given the demand, the enthusiasm that Nigerians are showing, I won't be surprised if their retail investors are preferentially chosen.
Again, because gambling has taken over quote unquote disposable income of not just the youth in Nigeria, a ton of Nigerians. You know the numbers, 600,000 naira, 600,000 CSCS, 300,000 are active, but gambling is 50 million. So an offer like this has drawn attention back to the capital market. I think SEC, NSE, and Dangote should use this. Yeah, they should use this. There's a lot of commentary.
I don't think so, Carlo.
There's a lot of commentary on Dangote.
Yes, I know.
Anywhere.
I know, but
so that's an opportunity.
But if you look at people really interested in Dangote, it's kind of very different from people investing in sports bets.
I know, but only they know that. A few weeks ago, a company issued shares that nobody bought. And when I mean nobody, what's their name? Alex. It had to go back. So there's an enthusiasm now that let's even look at this thing. So if SEC, NSE, Dangote can come together again and say, because of this enthusiasm, we are going to deliberately go after getting the young folks to invest.
I think it's an exaggeration.
Let's put it out there.
I'll tell you why it's an exaggeration in my own opinion. The number of people that have net worth of 10 million naira in the stock market.
Yeah.
Can you do have a number of that? Let's look at the number because it's very interesting to really pop up these things. Yeah, very cool. But I'm a realist, you know. I look at these things and I live on these things, you know. I know these things are not, this is not Wall Street or this is Mayfair. This is Wall Street, Nigeria, you know. And this is where I live, so I know what is attainable. Yes, to be fair, Dangote has brought in light to the market. You can't take that away, you know. But the reality is that many Nigerians can't invest in the market, and it's very painful. You know, look at we made the fastest 60 trillion in Nigerian stock market history, but look at the component of people that made 60 trillion in the market. You know, pension funds, Elimelu, Rabiu, and Dangote. Remove those guys with Peter Achiosai. Remove those big guys. You'll be surprised that you have to share the money with 200 million people. Yet it happens in the US, no doubt. But you could see that at least the US has a structural system where almost half of the population is exposed to the stock market. Many Nigerians are not working. You need to understand
which is my point. My point
exactly.
Eating. That we have that this is an opportunity, right, Kolumde? Like your data is correct.
We have to understand that the opportunity is not there for many people to leverage on because there is no income. People that can't even take a can of milk, people that can't eat balanced diet meals, people that can't.
This same guys bought MTN. MTN offer came, a lot of Nigerians bought. So digital.
See, do you know why MTN was an interesting stock? Let me give you a part of MTN. Most of the people that bought MTN at that time were women.
Why can't they buy now?
There were less than 40 working class women.
Why can't they buy now?
You know, women in Nigeria naturally. That's why I said that you also need to know the behavioral pattern of your market. Women naturally in Nigeria are quite conservative. They look more at blue chip. Like, I won't be surprised if a lot of women buys into Dangote refinery. But guys that are looking for the next big thing, that have a lot to feed on. Do you know what is happening in Kanu? Let's be honest here. We saw how many people are running to apply for jobs, and we've seen how AI has messed things up. Nigerians are poorer on the middle and lower class spectrum. We know that. It's the rich boys that are upper class Nigerians be on the space that we can see a lot. Because we have to also raise down our expectations about how this wealth. The problem we are having right now is that wealth is not trickling down to lower classes and people don't have the opportunity. In the US, it's different. It's much different. Yes, you could say that not so many people get access to big things, but see, you can get like an average American can really buy $300 to $500 worth of stock. In Nigeria, for example, I'm still seeing people still asking me how they can't even afford to buy a $5,000 stock.
Your data is not in question. I am agreeing with your data, but I'm saying, like, I don't think any other stock or any other offer, apart from even the MTN, has sort of motivated Nigerians to invest like this one.
Yes, but I'm not expecting 1 million Nigerians to invest.
I hear you. I hear you.
Yes, I'm not expecting. See, if we get 1 million Nigerians to invest in the stock market through Dangote, man, I'll be so happy. Then I'll be disappointed, you know. But based on reality, based on what is happening in our market, for heaven's sake, our market, see, we are a 160 trillion naira market for heaven's sake, and our market is still acting like a meme coin space. You know, it's something that we should talk about.
All good. Olumide, I hear you. But the point again I'm making is this is an opportunity. And if we do it properly with the issuing house, with SEC, with NSC, we can actually push this. You know, there's a way we can do the allotments. There's a way we can push this out for people to hear, and more people would invest. You have to get people to be invested, to have the experience of the market. In the US, the president is now doing the Trump account, right? Why? They want to get more low-income Americans to experience the stock market. It's not just a Nigerian thing. In the US, about 50% are investing in the stock market. Other 50 are not. So it's not, Nigeria is worse. But we've got to get where once people have an exposure, again, there's no debate. I'm not debating your facts. I'm saying there has to be an opportunity.
The opportunity is that the sad part about this is that a lot of people don't see this opportunity and won't see this opportunity. See, when we started, you know how many years I've been covering the Nigerian stock market? You know our analysis about President Tinubu when he came to power. And you know why these things are sad. Why one of the reasons why I don't talk about my wins in Nigerian stock market is just because I'm part of the few. And that is not a prosperous country. When a few benefit from it's supposed to be the majority. You see, and the truth of the matter is that we need to understand the realities on ground. If you are saying that it's only those that have jobs, that have liquidity, and are exposed that will get into this, then this is not a Dangote's problem. This is a Nigerian problem.
I hear you. Let's move on. I don't want to. Yeah, I hear you. Let's move on. Let's get Eric Tao. I called. I'm not sure if you are in to speak. If not, Eric, I've got Tobichuku or Eric. All right, Tobichuku, please go in and let's get your Tobichuku. Please go ahead. Tochuku, I mean. Tochuku. Tochuku is again. Let's get profitable man. Where are you guys, man? Where are you guys? Let's get Enna.
I think let me make the calling. I think profitable man. I think you can speak or chief. I think
they're not
maybe your
speaking.
mic is.
Yeah. Let's get Enna. Enna, please hop in, sir. Enna will be. I'll just move them. They don't speak, so that way we don't have to have them on the screen. I'll just take them off. That way, so that maybe you can hear me. Enna, let's call Enna. I'm not sure. Maybe they're not hearing me. I'm not sure.
Okay, Enna, you have the floor. Or Chief B. Chief B, you can talk. Yeah.
You muted everyone.
Carl, you muted everyone.
I didn't touch it.
Sorry.
I didn't touch it.
Yeah, so I wanted to. Yeah, sorry. Thanks, Mr. Carl. I wanted to quickly ask: do we know the extent to which Dangote has gone now when it's foray into the upstream side of things? Because that will bring more stability as well. I don't know if anybody has that information.
Hello.
So if I hear what you're saying, you're asking about the upstream side, i.e., what's upstream? Is that not a refinery?
No. I'm talking about the feedstock. The refinery is refining crude oil. So a while ago, we heard that Dangote was acquiring some upstream assets so that they'll be able to show up volume as well to secure some feedstock.
I know.
Just say that.
I know he already has.
If that comes through, it would help as well. Add more value to the refinery. If we know what the extent of that,
Dangote owns some upstream assets. That's no news, but yeah, he spoke. There were news around that, but I think to be fair, what I'm trying to say is that if he has some form of security of getting more to his, I think the long term for him, I think the mid and long term is the US market and the Naira swap deal, because you also need to be objective on the size of his upstream assets, and also the game around the upstream is not different from what we are seeing in the downstream here. My objective is looking at the prospectus. Let's see the margins. Let's see the capex and dividend yield. I think that makes a lot of sense to me.
Yeah, just hold on. So just don't forget that Dangote is set up in a free trade zone. The business model has always been to get the crude oil any way possible from Nigeria, from foreign, get it, refine, add a margin, and sell. So either way, he's going to, whether he's from Nigeria or from outside Nigeria, he's going to make his money. I think Nigeria would have been easier for him for logistics stake, right? And if he's going to buy Nigerian crude and paying Naira, he has an implicit exchange margin there as well. So I think either way, he's going to come out on top. That's why he did the free trade zone thingy. Very important for him to have done free. He went to Ogun State, they didn't give it to him. He came to Lagos free trade zone. So that's fantastic for him. Tochuku, please go ahead.
Okay, thank you so much, Mr. Carlos. I think there was an issue earlier.
Yeah.
You muted me, but someone now, I think he's affected everyone anyway. So that was why I couldn't speak earlier. But then again, my main question has been, I think you asked it later on when you were speaking with Mr. Larry. So that was my major question, which was about if we can get any rough idea or estimate what the Dangote share is, each share is going to cost when the IPO is being rolled out. So, but I think you've asked that question and you answered it. Then, just by the way, I was going to ask you when you were answering, I think, Mr. Charles, if you're a relationship expert, because the analogy you used to answer one of his questions was quite apt. I don't know if you get what I mean.
No, I'm not a relationship expert, but I look at it this way. Oh God, no, I'm not a relationship expert, but I'm just saying the same way. The same. If you have a company, I want to sell the company. The same way you talk to a lady is the same way you sell the company. You sell your future. You say, "Oh, date me today, and tomorrow I'm going to be the CEO. Today I'm not doing well, but if I get investments from you, I can scale. I can beat competition." It's the same thing Dangote is doing, right? So. If same with you. So if you see an opportunity, you don't wait and say, let me go home and take my bath and come out. You might be taking your bath and somebody will, so you have to hit the hammer while hit the iron while the iron is hot. Yeah, totally.
All right. No, thank you so much. I got you very well.
Yeah, you're fantastic. Appreciate you, sir. Yes, sir. Let's get Royal City. Royal City? Where are the ladies? Why don't we when we do space, we don't hear the ladies coming out to ask finance questions?
Because they usually do the buying. And historical data says they do the buying more than the talking.
Yeah, but how will they buy if they don't understand the back and forth, right?
So what I've just realized is that in our space here, Nigerian men usually are the quiet ones in terms of when they do the talking. They allow their money to the talking.
Interesting.
Because if you look at himself, for example, if you look at investing, for example, on my DMs, it is women that ask the questions most. Mostly women that are working with lower than 40.
I just think more. I think M10 is an outlier that women use the product. Women understand it was online, so there was a bit of
check GT. Check GT. Those do GT dividend on social media payouts.
Still women.
I see the number of people that show. I'm
still
telling
women.
You,
interesting.
All right.
Women. Let's get Royal City. Hi, how you doing? I'm
fine.
What's the question, sir?
Yeah. My quick one. Can you hear me very well?
Yes, sir.
Okay. So in my observation, I've started buying Nigerian stock since 2004. Right, and from my observation, it just looks like some Nigerian stock are like Ponzi schemes. Yeah, you are saying something around it the other time, but you didn't land very well. So I want to expatiate on that. Some of them are like Ponzi schemes, meaning that those stocks are invested in. Some of them are invested in 2004. I don't want to name them. They're like
name them. Name them. So we'll look. Japan
oil and gas.
Okay.
The Dasat, and there's another one. It's also an oil and gas company. I can't remember the name now.
Okay.
Unless I check my.
I'm seeing. From the two stocks you've asked the question, sir.
So my point now is, how do we invest in such a way that we don't get our fingers burned or investment bonds? Those monies are invested in these companies I mentioned. If I had bought those stocks in something in a country like the US, if I had invested those stocks in like a US company, by now I'll be asking somebody like Tinubu or Wiki, what is the problem? Like, we'll be talking on the same terms. We'll be, Wiki will talk, I will talk. So what I mean is that I'll be in serious money because I know how much this money would have done. I did a calculation in dollars. In that time, I knew how much this money would have done by now. Okay. So I had a foresight. I did those investments then. Now, you mentioned you referred that if Dangote's refinery shuts down, or maybe the market capitalization drops or falls, because I'm a shareholder, my share will also drop. If it shuts down, if it closes, that means my money has gone. So is there any way that I can protect my investments, or is there any way that protects one's investment such that it doesn't go with the wind like that, just like these companies I've mentioned. I remember the other one.
Yeah, Royal, you follow football, Abi? You follow football?
Yeah, I'm an Arsenal fan.
Sorry, I apologize. Okay, so if you are let's say you are Arsenal today, right? And you guys know you have to buy attackers, Abi? Would you come to Nigeria and buy a very, very young, unproven striker, but if you buy him tomorrow, he can become very, very good. You can buy him cheap, 100,000 naira, selling, or would you go to, now that you're a Champions League player, or would you go to Spain and go and buy Alvarez because you want to be sure that tomorrow, when you get to finals, you have a striker that can win? Which do you think, in your current state today, an Arsenal team should buy? Alvarez or a young guy from Eyimba? Who should they go buy today?
Well, I'll buy Alvarez in Spain.
Why would you buy Alvarez?
I see he has more potential.
I don't know. No, it's not potential. You're buying Alvarez because you are Arsenal, because you're going to the finals. So you need a proven guy that would beat down a team like PSG, right? But if you are, say, Wolves, you're not playing in Europe. You just want to qualify to the next stage. You can afford to buy a young Nigerian guy to try him and say, wow, this guy might become the next Drogba, or he might fail. If he fails, no problem. If he becomes Drogba, admit it, right? It's the same with buying stocks. You've got to buy the stock to meet your objectives. If your objective is just to qualify from Division 1 to EPL, you can afford to go buy a younger guy, buy an English person and all that. But if it's to win Champions League, you're going to go buy an expensive player because you want to be sure. Expensive means highly capped stocks. The stocks you just quoted, Japol, you quoted another one, those are very low cap stocks, very low volume stocks. Those companies are not as large as maybe buying an MTN. For every Japol you bought, there was an Aradel. There was a Seplat you could have bought. Seplat is doing about 2,500% nominal. Real return, 5.7. If you had bought Seplat instead of buying the other one you bought, you'd have been talking to Wiki now. The point I'm making, no stock is good or bad, but you've got to buy the stock that matches your objective. If you want to take risk, then you are buying those ones that you've bought. And unfortunately, the risk has turned against you, so you've lost money. But I can also give you, if you had bought a Presco, which was a low cap stock years ago, it's done nearly 6,000% as of today. So you buy what you think is your objective. But if you don't want to take risk, don't buy low cap stocks. Low cap stocks are for high risk, high return. If you look at the NGX, the whole Nigerian market, if you remove the 30 big boys, the other market goes faster than the other big boys, but it also falls faster than the other big boys. So why are you investing is your first question. And once you get why you're investing, then you want to buy stocks that meet that objective. If you want to make a lot of profit, then you shouldn't be complaining about you bought this stock, it crashed. It's not a Ponzi scheme. It's profit and loss. You bought a stock, it's gone up, it has crashed. Look at the four. I don't know if you can see the four companies on my YouTube. Dangote, Seplat, MTN, Zenith. These four companies, look at the minimum return is 774% return over 2010 for Dangote. You didn't lose money on those stocks, but they are slow, high caps. It takes time to grow. So there's no good or bad stock, right? There's no good or bad investment objective. There's just what matches you as an individual. If you're buying small cap, low volume, high risk stocks, then you can't complain about risk, right? Because that's what you went to. You can't go to the market and be complaining that there are too many people in the market. That's where you went to, right? You can go online. It's just you online and you buy. Does that make sense to you, sir?
Yes, it makes sense.
So
someone asked me
you want to find out, once you know why you are investing, and not esoteric answer, are you high risk, low risk? When do you need your liquidity? Then you can say, okay, I want to do high or low cap. I want to do low PE or high PE. Then you can then go back and filter, and you can buy stocks according to that criteria. If you just a question, if you lose this money, can you get it back? Yes, you can do what they call stop loss, but that's for trading. If you buy a stock and the stock crashes, your money is gone. But if you buy a stock, you are an owner of that company. If you had bought MTN, you're an owner of MTN. Yeah, MTN makes money, you're making money. But if you buy Nitel, or if you had bought Nitel, Nitel is gone. Your money has gone. Yeah, that's the market.
Okay. Is it someone asked? Okay, someone asked a follow-up question. Someone asked if it can be it's safe to buy on Bamboo. I didn't get a response to that.
Yeah, I think the gentleman here said that every registered broker can sell the stock to you. So all those apps like Bamboo are SEC registered. So as long as they are registered by SEC to offer those shares, yes, you can buy them on the offer. Just make sure they are SEC registered, which means registered stockbrokers, including the registered online brokers. You can buy from them. Don't buy from somebody says no. Buy from only SEC registered folks. That's going to be your answer. Yeah.
And I wanted, sorry, Carl, let me just add to that. I want also people to understand that just like all banks are not equal, all brokers are not equal. For those that are brought into IPO, I think some people have been disappointed. People like some young Nigerians now, they've learned the best way to hedge against that disappointment. Usually, there's nothing bad. Just like you have 2 to 3 bank accounts, you can have a fintech or a traditional brokerage. I think it's a two-way thing, because if you rely on one and you get disappointed, well, you might have to buy at the market. So you have to be very careful about the kind of broker you are opening an account with. They are not the same. I want that to be.
Olumide, just be clear,
Olumide.
What do you mean by the same? So if they buy through a SEC guy, they are okay, Abi?
Yeah, so what I mean is like, I'm even talking about among the SEC guys. So for example, I don't want to call names. So for example, if you look at the top brokers in Nigeria, like the ones that control liquidity, they usually have strong preferential, and they are, because of their experience in the market and things like that, their tentacles are widened, So you can't be competing, you as a 2-year-old fintech company competing against that. The odds will be against you. So I just want people to be aware, because a couple of times, Kalu, a lot of people have registered on SEC registered platforms, but they've not been able to get their execution, and they come on social media and start cursing, and you just be right. What happened? So the best solution is that if you are using a broker, or you are addicted to fintech or beauty, it's not a problem. But try and have a plan B, and make sure the plan B is not the same. So, for example, it doesn't make sense opening 2 fintech and sell 2 fintech platforms. I don't see common sense that. I think you should look at those that have strong investment or traditional exposure. The old guys, mix them with there's nothing bad. But I think it's very important for me to say it here, because I don't want DMs filled with that. People should we couldn't get the other, because at some point often history has shown that sometimes not everybody gets what's being requested.
That's why I was asking the gentleman again from Larry, if there was going to be that preferential retail allotment. Usually when you do your allotment, they do that at their table. They'll say everyone below 1,000 will give you. Then the big boys, they start to reduce their allotment. So I would say, if you are retail, the gods might smile on you. So don't say because I'm retail, you won't buy. If you are retail, go and buy. Whether it's through your online app like Bamboo or traditional apps, as long as they are SEC registered, yes, you're on the right spot. Royal, thank you so much. Dr. Enna, how are you doing, sir?
Light shineth and darkness cannot comprehend. John chapter 1 verse 5. I think no business is too big to fail.
Mm-hmm.
As we begin with Aaron. Aaron was in the S&P 500 basket before it failed, and they posted of assets worth $68 billion. And you cannot use yesterday's information or past performance is not guarantee of future delivery. And if you want to hinge that, I'm reacting to someone's question as regards the risk. So to understand how past performance would hinge on future deliveries, maybe you want to go study the balanced scorecard designed by Professors Kaplan and Nathan of Harvard Business School, then not too big to fail. Dangote itself is new to the oil and gas refinery sector. As someone who works in manufacturing, I work across different kind of plants, fertilizer. So fertilizer is cement with your feedstock. For fertilizer, you just have gas, methane, CH4, and oxygen, you're good, and ammonia. But for cement, you have your limestone amongst other derivatives there by you as a feedstock. But for petroleum, like we know, it's not as straightforward, and the technological output to those plants are totally different. You know, initially when they launched, they had problems with their cracking units. There have been publications to that effect. Yes, they'll be handling that. So I'm saying that to say Dangote is new to refinery. And to answer his question, what are the risks? Apart from not hinging on past information, on past data to guarantee future information, I would also advise that a pestle analysis would help you. Why am I saying this? We are in election season. My question to you, Carlo, as I go on is, when is a good time to buy? Because looking at the pestle analysis, the political angle, Dangote just sued the federal government as against the fight with the other regulatory. So if we run through the pestle, political, economic, social, technological, environmental, and legal, my question would be to you, Carlo, or any other person here, please. When is a good time, pre or after election? Because if this government that he has to sue to try to see if he can buffer imports in, because this current government is more important in bringing prices of things down than guaranteeing future growth in their development. Why do I say that? The commodities are being imported right now because they want the price low so that people can afford it. And they will sacrifice the development of the country for that. That is their own objective. So the question is, when is a good time to buy? And even if it's a good time to buy, know that it's election or post-election season. If this government, when you already know their direction to things, and they don't perceive Dangote the way you perceive him, would you give two scenarios? If this government remains, buy. If this government does not remain, and a new government that is more closely tilted towards Dangote, do not buy. Then lastly, the oil and gas sector is very, very macro than micro. Dangote is not an integrated oil company. So even if he was to go explore, like someone was saying, what about his fields? What is happening there? The macro dynamics vis-a-vis the petrodollar, which I know, Kalu, you're really edged upon, how will all of that play into Dangote? Because we know Iran and Venezuela that the US is hinging on right now. America might sign a good deal with Iran, like oil supplies are coming in from Venezuela. How would all of that play into the future of this company and how it will deliver? And then lastly, I've not heard a company's performance in the future, like we can see from the big ICT companies, will play as a function, especially in the technological high space, like refinery, where there's no new technology. It will play a big role in their investment in R&D to know how they will perform in the future. Thank you, Carl.
For this your question, I'm going to ask Ogalayit and Olum to join me. Let me see if I can attempt the first one. When is a good time to buy? Again, let me use a football analogy. When is a good time to have bought Messi? Should we have bought him when he was a young man, just fresh new? I get you. Because look at it this way: during the military rule, I was just a young guy in the stockbroking firm. Stocks were there, nobody was buying. Some guys were buying, and the military went away, and those guys that bought depressed stocks in military rule, those stocks became private and they made a lot of money. Again, some people bought stocks and lost money. You buy to me, and this is what Warren Buffett has said, you buy when things are at a discount. Now, what is a discount? In America, a discount is, there's recession, there's tight money. So they don't have army coup there. So that's a discount for you. Things are bad, there's COVID. So you go and buy because there's a discount. In Nigeria, a discount is the bad news. There's bad news. There's Boko Haram. There's falling consumption. People are leaving the market. So there's blood on the streets. So you go and pick up these things as a discount. That's how you view discount in Nigeria. Is Nigeria today at a discount? You could say yes, the markets are not doing that well, not the stock market. But the general market, I posted consumption numbers today. If you look at from 2024 till today, it's almost a 91% fall in consumption, i.e. Q4, 91% fall. Lots of folk are not buying. People are going hungry. So are we operating at full capacity? Are we fine on all our cylinders in Nigeria? No. Why? Power supply insecurity. So if we fix power supply and we fix insecurity, the GDP of Nigeria will not double, it will triple. But you bought these stocks at the price when they were at a quote-unquote discount. The flip side is if you go and buy these things today and it gets worse, because 4 years ago, we were not seeing wholesale kidnapping. I mean, Chibok was in a global story, Chibok, global. Today, 3 schools, I believe, have students that are kidnapped. It's not even a regional story. No one's even tweeting about it on Twitter. So that's the flip side. The investors that make money are the ones that go contraring. Warren Buffett has made money because he has bought stocks that were underpriced and he held them. You can't make money chasing the momentum, right? So I'm not going to tell, it's going to be, what's your take? If you think Nigeria is at a discount today, then everything you are seeing is cheap. So you want to go in and buy. That's how I would look at it. I have my own answer. I don't want to say it here because I would look at some leading people. On macro, I think your macro case, Enna, actually makes more. It gives Dangote that power. That's to me, the hidden power that Dangote has. That when you look at Venezuela out of the picture, you look at Iran, now they are negotiating with the US. You have an oil company or an energy refinery in West Africa, totally insulated from Hormuz, but can supply India. If you take away China, India is the largest market globally now for crude oil. And China seems to have its hands full. India needs oil. Russia is having hands full with Ukraine. So Dangote is out of Hormuz in an oil-producing country, can refine any grade, literally, of crude oil, and can also export petrochemicals, detergents, polyethylene, aviation fuel. It's already the top largest exporter of aviation fuel today. It's only doing that because there is no Qatar, there is no all those Saudi, they are all having their issues. So if you are a guy in Norway and you want to diversify your petroleum assets, you've always done Middle East petroleum assets, maybe you've done some US petroleum assets, Dangote is a natural destination for you. It offers scale. But it's not just that Seplat is there, but Dangote offers scale that attracts Wall Street. Wall Street will not invest in a good small company. They would invest in a good large company. And so on a macro level, the story for Dangote actually makes sense because the macro side of it, right? So that's what I would say on that. And then the R&D, this is a brand new refinery built, it should be the latest refinery built in the world, right? Of all the refineries, one in India, the one in Qatar, this is the newest, largest refinery on earth. US, I think India now wants to go build one in the US. That's going to be operational maybe 5 or 10 years. The new refinery wants to build in the US. So before that one happens, this Dangote refinery in the entire world is the newest, largest refinery. Every R&D is going to be in this one. So I would say on this 3, just when it's a good time to buy, it's going to be a subjective thing. If you think it's a discount today or it's going to be a discount tomorrow, that's when you buy. But for the macro, for R&D, I think Dangote wins on that race. Let me, if Larry is still here, I want Larry to chip in, especially on this and aluminum as well.
What if the government of the day? You didn't
that's your risk. That's the discount I'm speaking of. When the military were here, it was this discount, but we did not know it was a discount till they left. We did not know.
Okay, so you're saying if the government changes hands, is a discount, but if the government remains, if APC remains, it's not a discount.
No, what I'm saying is look at it this way, right? Today, what's the risk of the government? Look at it. I shared the article, right? I told guys, look, read that article. If you read that article, the gentleman raised a few points. This is the oil and gas article done by Bisaru. I shared that article. I said he raised some questions, regulatory. He says that Dangote's valuation and going concern is based on many regulatory forbearances. Number 1, Naira for crude. Number 2, import licenses. Number 3, free trade zone. Number 4, dollar dividends. He said all these are all policies that can be taken away by by any other government. He said that. So you ask yourself, if I become president tomorrow, I don't like Dangote. I don't, right? Would I remove anything that will make the price of PMS go down? Or would I say because I don't like Dangote, I would, deal with him? Because what Dangote is doing is he's hugging, when you hug the bear so tightly that the bear can't do anything because you are bear hugging him. That's what he's doing. So there is no sunlight. If you touch him, PMS price goes up. That's what Lumide was talking about. You touch him, PMS price goes up. It's not because it's Dangote, but he has that much scale. What's the alternative to Dangote? You want to import, what Forex? What Forex? Fertilizer. We've had fertilizer comes in Nigeria. There's the one in Delta. Have we seen any major impact, even with Dangote? So I think that's the difference with him, sir, that even if you don't like him, because he has so be a hugged you, it's difficult to say, I want to deal with this guy. Again, that's why he's selling. Lumide is asking what he's saying. He's selling all across Africa. He's also diversifying his ownership. If the Norwegians come in and buy shares in Dangote refinery, it makes it more difficult for a Nigerian guy to wake up and say, I'm going to take over. I remember when Kogi State woke up and said they want to take over Dangote Cement. And Dangote Cement is owned by BlackRock and the rest. And these guys know what they're talking about. Kogi State, they'll call Nigeria and say, oh, we're going to seize your JP Morgan cash account and you hold dollars. And that's what the federal government will call Kogi and say, back down. So it's a game, sir. And again, like I said, if you believe that Nigeria is at a discount today, then everything you are seeing, including Dangote refinery, at a discount. If you think we've topped up, that is the best Nigeria can get to, then it might not be so much of a discount. It's your call. Do you think it's your call? If power supply enters Nigeria today, power supply, not this nonsense. If we get power, not even 24 hours, 12 hours a day guaranteed power supply in Nigeria, the GDP of Nigeria will double. Not from this 300 back to the 500 to double to $1 trillion on just having 12 hours consistent, regular power supply. The GDP will go from that not this one, 500 billion to about $1 trillion. That's the gap, the opportunity in Nigeria, the infrastructure opportunity. That's just fixed one small part, which is PMS. There's cocoa infrastructure, there's road infrastructure, there's everything in Nigeria is deficient. Just fix something and you just scale and you make it. That's my answer, sir. I don't know if Larry or Lumide wants to add anything to that, sir.
Carlo, I think you've done justice to those questions. Like in any investment or business, there's risk, there's macro, there's government risk, and listen, we see time to time. I mean, early this year, NNPC GMD said those refineries are dead. A few weeks ago, we were here and they're looking to revive them. So those are risks, right? They can come up. There's competition. People who's looking to build refineries can come up. But you can't ignore scale, like you said. And his criticals are essential products. If they make business quite difficult for him, I think a lot of Nigerians would pay the price for it. And one of the ways to mitigate some of this political risk is sharing the wealth, which is listed. And, I'll give you a good case study. I know Lumide has touched on the MTN transaction. I led Chapel Hill led the public offer on that transaction. We're the first to do a digital public offer in Nigeria, and since then the NGX and everyone else has followed suit. If you all recollect, before that public offer, before MTN became a public company, there was no year they weren't having problems with the government, either as the NCC or as FIRS. But the moment you have shareholders, those are your biggest, loudest voice, your biggest advocates. And I think government, and not to say MTN wasn't guilty in some of those things, in some cases, yes, they were guilty. But in some cases, there was just some overzealousness by government officials. If Dangote is able to get 5 million Nigerians as shareholders, I think that's, political insurance that, he will pay for 10 times. And Olumide was kind of, hinting that he doesn't see 1 million shareholders. It's possible what he's trying to do. With technology, I think we can go far and wide. If I look at some share registers today, FBN, old legacy bank, has 1.2 million shareholders. Access has 900,000 plus shareholders. If I look at the journey of an MTN from 10,000 shareholders to over almost 150,000 shareholders today, in a span of 2 or 3 years. We created 130,000 new CSS accounts on that transaction alone. It's very possible. So listen, there's risk, and I think Dangote and his advisors are very aware of that. But investors just have to make that judgment call around, and again, what's your horizon as an investor? Are you a short-term investor? Are you a long-term investor? Again, you do your analysis based on what your investment horizon is, and decide on that.
I think very well said, sir. There was a banker lady that was a few years ago. That bank was the rage of the town. A lady very, very close to the government. That bank is no more today. So it's always split both sides. But there are some banks that were there with the military. They've been there through civilians. They are still here today. So it's your call, really. There's no macro template to do this. It's your call. We have a lot. Let me go ahead.
Yeah. So I just wanted to add a little. I think the investment banker and you have spoken very well. To be honest, I don't see why when you want to go into an asset, you should look at the positive, the negative, and your objective. But for free, I'll tell you that, Nigeria, very interesting country. If you look at historically about life, people that make the most are people that bet when the risk is usually high or the uncertainty is kind of a bit not clear. I recall that when I was making my bet on President Tinubu, despite the fact that my political ideology was not aligned to his political party, I was betting on the fact that he will unlock some reforms, and he did. And you could just see how wealth blew in the market. So it just goes back to the same way, because you need to also look at the fact that where is the best place as a Nigerian to get opportunity? Yeah, we could look at the insecurity as you could see me cry about disposable income, but I'll be telling you a fact like that I'm not really exposed in Nigeria, because I've oftentimes realized that the best place to make money or grow wealth is a place you are politically, socially, economically relevant. If I was relevant in France or the US more, maybe I would have done that more, because it's not even just about wealth. You also need to look at social capital, your legacy you are building, because like the investment banker have spoken that the opportunities in the market and things. And truly, do you think Nigeria in the next 10 years will still be a $200 billion economy? No. I think the way the dynamics of our country is that we might be disunited as a political entity, but there are a lot of things that still unite us, a level of hope. And for me, I think one of the things I've learned in financial markets is never to kill the catalyst behind hope. So I would advise you, if Dangote is, despite my valuation concerns, definitely I will buy into. The question now is my objective perspective. Am I looking for short-term gains or long-term gains? It depends on your age, it depends on liquidity, and it depends on your horizon. So if you have balanced that, I don't think anybody will have a concern, because for me, I don't think anybody will tell you that Dangote will be a bad investment, to be honest, except maybe the unseen happens, maybe a nuclear attack, or which that would be an apocalypse. So finally, I feel that where I'm just worried is that we should not just buy these things blindly. We should weigh. We should talk to our investment bankers. We should read reports. Sure. We should weigh the ups and downs. That is my only point. But saying that is not, it doesn't have. There are a lot of opportunities with Dangote. Even if you don't have money to invest in the stock, like I say, just reading the prospectus, make you understand the oil industry, and who knows where your opportunity will come in. Because Nigeria is still, see, the US stock market is worth 77 trillion. Nigeria is just less than 2-3% of that. So if you look at the opportunities with a 224 million population, and we have the youngest population in the world, and you look at the fact that the system seems to have bottomed, the macro. Now it's just the micro that remains now. It's just a matter of time. So it is up to you whether you bet on Nigeria or you're against Nigeria. But for me, I think I'm betting on Nigeria.
I mean, can Nigeria go lower? Dr. I mean, Nigeria was at 500 billion, and then we went half. We dropped by half. I've never seen that before, where a country just go by half. There's no war, there was no disease. We just went. Yeah, I mean, but we take you down by 50% of your GDP. And
I think it was realistic.
There was no devaluation. It happened before devaluation. The Naira, the economy went from about 5 or so to about 2. There was no devaluation. There was no war. There was no population crisis. There was no disease. It just halved. So his question is valid, because if he can just halve, this is the same country where in 2013, CNN said Nigeria was among the top 3 fastest growing in the whole world. Who was number 1? Qatar. Remove them because they are oil, small population. But do you know what it means for a country of 200 million people to be the fastest growing in the entire world? That was Nigeria in 2013. Then suddenly by 2015, that same country, by 2023, that same country had half the GDP. No growth, no consumption, currency crisis. So I get Enna's question.
Yeah, but Enna should look at this point, Kalu. We don't have a Dangote refinery. Now what has changed? We have integrity in our markets. S&P upgraded us. Russell reclassification, bringing liquidity to the market.
Those upgrades, Olumide, are because we can pay debt. They are upgrading that we can pay debt.
As recovered. No, I'm giving the difference now, why it is unlikely we see that scenario. Now, with Dangote's refinery in play, GDP, if you look at experts will tell you that GDP will definitely, because now, for example, is expected to beat Ghana by a mile because of Dangote refinery. So I think for me, to be honest with you, even the fact that the bad things have happened in the Nigerian side, I think in the long run, Nigeria will definitely recover, because what Dangote is now doing now, Dangote is now exporting, it's now a symbol in the system of Africa. Look at what it's doing in East Africa. Look at the fact that South Africans and the Egyptians are also looking for security guarantees, energy security guarantees. My only problem right now is the fact that our middle class disposable income is nothing to write home about.
Nigeria has no middle class.
I think what people are betting on is that if the president wins the re-election, he will have the political ability to take risk. He's not returning again, so he might likely take on reforms that will benefit the middle and lower class. I hope to see that. If it doesn't, the market is betting. If another person comes in, I don't think the stock market will like that for now, based on that outlook, because what people are looking at is that they want stability. Investors want stability. Nigeria's richest man at an all-time high. Dangote is at a level it was never before. Rabiu broke into the second richest man in Africa list. The level of wealth between the first 10 richest men in Nigeria, you can't even compare them with the Black Americans in the world's largest economy. So, the positivity is there, but it's just the middle class that is the problem now.
Can I make a prediction?
Go ahead, sir.
If Tinubu comes back, when is the IPO?
Maybe September, I'm sure.
Before the election?
Before the election, yes.
Okay, so if Tinubu comes back, I don't see the stock rolling. But if he loses, Dangote's stock will skyrocket. Then lastly, I saw the picture with the Norwegian bank guys. Now, when those, our investment outlook, like our brother was saying, we should look at the social impact. It's a little bit different from the global big boys. And the global big boys, like the Norwegian guys, they work with a whistle. Once there's a signal, then they all pull out. So you said you were a stockbroker before. So my question to you, talking of the Nigerian now, not just the Dangote, how would you compare a Nigerian investor, since you've worked as a stockbroker, you're now in the US, to let's say an American investor? What's the difference? Then lastly, I remember these Norwegian guys, they pulled away from a coal investment they had over 300, maybe 900 million pounds then, citing environmental intrusion and all of this. How and when do you think Nigeria will get to that place? And if we have a large chunk of these global big boys coming into like the Dangote sector, do you see them in the future based on, let's say, there's increased environmental conservation, or just thinking they're also pulling out sharply, like things happen for like Diamond Bank? Thank you.
Yeah, let me do the second. I think Norwegians are coming to Dangote to partner with him to invest in Africa. I don't think they're looking at oil or Dangote refinery per se. I think they are looking at him that, listen, we're going to partner with you. We'll give you capital to fund what you're doing in Africa. Dangote is doing 4 billion in Ethiopia on just one project. He has more projects in Ethiopia alone, but one specific project is 4 billion United States dollars. So the Norwegians are saying, listen, we have $1 trillion. We don't know Africa like you do Africa. You've proven that you know Africa. You have invested. You've made money. We're going to give you the capital to go and invest. You would own shares. We would own shares. I think that's what Dangote is doing with the Norwegians. I don't think Norwegians are just coming for refinery. They have refineries now. It's Norway. That's on that part. So, and again, yes, they might pull out, but remember, they don't do war in Norway. They don't do same stocks. Yes. But I think that's why they're coming to Dangote. Africa is a brand new investment horizon. They get a lot of credit. They can invest in growth that they can't find in Europe. So I think there's a lot of opportunity in Africa that they don't have to go towards ESG things or things that are controversial. Just agriculture in Africa can change even the world in Africa. They just invest in maybe fish farming or Lake Chad pipeline, things like that, or the dam in Congo. It's positive for the environment. They can get a lot of green credit. It creates jobs. They tick many boxes by doing that in Africa. Let's go to your question of US and Nigerian investor. I think the key difference is just going to be information and credit. The difference between a US investor, if I sit on my company in the US, any company, I can find out everything I want to know about the company. Who is buying shares, who is selling shares, when they bought. I can know anything I want to know. There's Bloomberg. I can take a walk, listen to Bloomberg, and download what happened in the week. I can know everything. So there's information overload. What people in the US want is someone that can simplify and give them direction. But if it's information, there is overload. In Nigeria, it's hard to get information. You want to get maybe yield curve or the returns for 20 years in Nigeria, it's difficult to get it. There's something called the Buffett Index. I tried to do a report. I could do that for the US. I couldn't do that for Nigeria because Nigeria doesn't track it the way we track in the US. The second one is credit. In the US, there's credit everywhere. Dangote offered as coming up because in the US, people will just use credit cards or get credit or home equity line of credit and buy. So that participation is not just backed up by interest, it's backed up by capital, right? In Nigeria, like Olumide is arguing, not a lot of people can buy Dangote. Even those that know it's a good offer, how much can they invest in Dangote? How much? If you're not investing, and I'm not trying to be, if you want to put in anywhere from 5 million in this thing, you're not, because it's in dollar. You had the guys, it's in dollar. So if you do ₦1 million, it's like $600, right? $600. So if you're, instead of doing, take $600 and buy the VTI the index and move on. But if you're not doing anything like 5 million, where you're talking about maybe you're going to do about $3,000 or $5,000, then you are saying you are investing in Dangote. So don't take your money, right, and leave. Maybe you can buy 10 cow, but instead of buying 10 cows, you go and buy 1 cow. 1 cow is 1 cow. That 1 cow can fall sick, but 10 cows, 2 can fall sick, 8 are still living. I don't know if you understand what I'm saying. So again, Linda is trying to say that in many ways, but if you have $500, it's better you just buy the index of, say, the US, or if it's Nigeria, buy that index, than saying you want to go and buy one specific company. I think that's over concentration. And that's the difference, I think, in my view of US and Nigerian investors. Let's go to Mr. Eric Tao. Anna, thanks very much. Eric, we've been trying to get you in to speak a long time ago. Welcome in. What's up?
Hi, Carly. Thank you very much. Yep. Great to always be here. Great to have you. Great topic. Thanks to Olumide and all the others.
Olumide, doesn't let you go. We have about, let's just see how long we have, if you don't mind, sir. Eric, go ahead. I'll let you know.
Just a few questions and, shall I say,
almost there.
Insights into the...
About 15 minutes.
I think the last time anyone IPO'd on this scale was in 2007, and I think that was Echo Petrol. In terms of refineries now. No company has a petroleum refinery at this scale. So if you say 650,000 barrels per day since Aramco, and Aramco is completely state-owned, and theirs was more, let's say, offering of a piece of a larger entity. That's just one. Secondly, when Aliko started building this, I think 2014, there were a lot of criticisms around the ESG, the energy, green compliance, and all of that. Fast forward to the economic climate we are in now in terms of energy security, everyone wanting to control their nation's fuel dominant. Nobody wants to be dominant. I say dominant. Nobody wants to depend on any nation for refined petroleum products at the moment.
Yeah.
Aliko is asking for, I think we're saying 45 or 50 billion, that's the valuation, and 10% float, I guess. So 5 billion from the local markets. Now, if we're only saying 5 billion from the Nigerian market, I think that's a rather small figure in terms of how much he has invested in the plans. I guess people have already spoken about the pension funds and all of that, how much they're allowed to invest. And all I will say is, and my question comes after this, all I will say is there is no historical precedence for what is about to happen.
That is true.
No one has done this before. And if I don't think the people who are currently fighting with Russia in terms of gas security and whatnot, looking at a Nigerian refinery about to go public. All of that refineries in the past, by the time they went public, they were already producing positive cash flow. Aliko has held the debt for 12 years on his balance sheet.
Mm-hmm.
And he's saying that he has more refining capacity than Ambani, Jagmana Ambani. Ambani has 1.2 million per day. Aliko said he can do 1.4 million. I understand people's fear about, sovereign risk, the Nigerian government, the whole court case and all that. But I think when he goes public, he will be 2 to 3 times larger than any other player on our stock market. So I want to know what you think that does to things like the MSCI emerging markets. I think 2014 was when we were removed from JP's emerging. I think you have the numbers.
It was a year after Buhari came. So 2014, 2015. Yeah. They warned us in 2014 when Buhari took over, then they removed us. But they warned us first. So I get your question. And if you ask me, you see this thing about frontier markets adding Nigeria back and all that, I think it's because of Dangote refinery. I think they want to get a way to buy into Dangote refinery using the index. That's what I think they are doing.
The NGX, just the NGX alone, now there's a chance that we might be re-included into those.
No, they are going to create an index. They're not going to buy NGX. They're going to create. Before we only had NGX 30 that they used to buy in. It wasn't called NGX 30, but that ETF called MSCI, the MSCI X Nigeria ETF. It used to only buy the top 30. And even that top 30, it was Dangote Cement, those big boys. It used to buy just the big, highly capped stocks. It's going to continue again. So when they do this adding Nigeria back, what they're going to add back is going to be Dangote, Airtel, MTN, those large cap, Echo. That's what they're going to add back, right? So, but there will be a feed off because it will be a positive feed off. Nigeria is added. So any day trader sitting in New York will be, oh, Nigeria is added. He's more open to buying individual Nigerian stocks. You're going to see a huge FPI flow to Nigeria, not just for stocks, but for bonds, but for property. Things are going to happen because if Nigeria is back, money is going to flow. The cost of borrowing is going to fall because your bond yields are going to go, what happens? They go down, right? Because the price is going to go up and all that because there's cheaper capital flowing. Once you buy the bond yield, you bought Nigeria. Once you buy the equity ETF, you bought Nigerian stock. So Nigerian stock market every month will just go up because there's inflow coming in. So it's net positive. And the way you set it up, Eric, is that we don't have any comparison what's going to happen. We don't know what's going to happen. This thing can bomb, but this thing can blow up. But I would say if you don't know what's going to happen, right, but you think you want to have a piece of this, that's why people are rushing to buy. I don't think you will see this is my personal view. I doubt you will see this in the secondary market. My personal view, like Lumdia said, it's going to be very, very little. So if you're interested in buying, keep that in. We've got about 10 minutes to go, so I want to get folks to speak, Eric. Let me just get folks to speak up because then we'll just call it a day. We'll just be here for 3 hours and Larry and rest. So Eric, thanks so much for that. Let me get profitable, then we'll do Femi. Profitable and then Femi, and then also, profitable. Go real quick. Got a short time.
Can you hear me?
Yes, I can hear you. Go ahead.
Okay, thank you, Mr. Kalu and Mr. Lumide. Let me just go straight to my question. The first one is that based on your experience, because someone like me, I just joined the markets about 4 to 3 years ago. I've not really experienced the market, the election cycles in Nigeria. So based on what you have seen, look at what is happening in the market right now, like in this Q1, about 29 trillion naira. What do you see? If government change in 2027, where do you see the stock market? Are we still going to maintain this momentum? Or do you think all the policies that have been set already, something will affect them as a young investors, that also as a community? So I want to really get the perspective and learn from people that have.
Honestly, Olumide can help them. I don't think.
Is to Mr. Olumide.
Now,
the coming of Dangote.
Real quick.
Now, someone like me, we are just in the market 3 years, 4 years is not a good year enough. So I want that. I believe I don't have the fund to buy Dangote IPO right now. And I'm very sure there are other good companies in the Nigerian stock market that someone can invest to. So my question is that when Dangote actually come by September, what are the sectors that will benefit from the listing?
Wow.
Thank you.
What's that? I just want the budgeting.
Look at what let me ask you a question in a different way, Lumide. Do you think that the market is booming because of APC, or is booming because the companies in Nigeria are doing some things? What's your take?
It's booming because of the you need to look at the triggers. So first of all, the energy and non-indexed was booming when petrol subsidy was removed. Petrol subsidy was removed. You could see how that area boomed very well, and the structure around NNPC and the oil industry, it helped.
Okay, but the question is,
we saw the banking CBN.
Yeah.
So to be honest with you, I think they will add more weight on the oil industry. To be honest, positive. There's a positive.
You guys are saying oil industry. Dangote is a sector on its own.
I know.
If they don't put that in a separate sector, it will skew.
Yes, no, I'm not even talking of the size. We're not talking of the size here. It's not asking about inflows to other investment. Because let me give you one thing that I feel that is unique about Dangote. So if you look at the banking reforms, when recapitalization and everything, and when the windfall tax was, some stocks trigger others, and the boom. Tier 1 banks triggered Tier 2, and you could see the boom. Even to the point that banks that are not profit yet, like Jai's Bank.
That's true. That is very true.
So coming back to it, I think if Dangote's refinery is a good success, it's going to amplify that
other
space.
Stuff. Yeah. But the question is I ask again, do you think the market has gone up? Yes, oil and gas went up because of the first subsidy removal, but that was downstream, right? Banking has gone up because of the capitalization.
Yeah.
Fresco top performer. Wema, top performer. Better Glass, top performer. NCR, top performer. What policy made these stocks go up? Is it APC policy, or these guys were just they were? What made them go up?
See, you can't take. It's just like Donald Trump. You can't take the credit of the market away from this administration. As much as we want to politicize it, you are totally right. The market at some point was so undervalued. Look at the market was less than 40 trillion naira at some point. So it was so undervalued, but there was no liquidity. We were downgraded. Our currency was overvalued. So at some point, the trigger, the catalyst, and you have to give him his onions. He brought those triggers and FPIs and the businesses. Yeah.
So is the Nigerian market undervalued today, or valued is Nigerian stock market today?
If you ask an African, they will tell you that it's undervalued, because if you look at the PE in South Africa, Egypt, Morocco, Nigeria market still looks like shortbread, very sweet, But if you look at it as a Nigerian, as a Nigerian, staying in Nigeria, or as a Nigerian that invested in 2023 to this point, for example, look at Julius Baker, look at Boa Cement, look at Dangote Cement, look at Zeblat, and look at what they are trading now from just in the last 36 months. So it depends on the perspective. For an FPI investor, he will tell you it's undervalued. For an South African investor, he will tell you it's undervalued. But for me, as a Nigerian that has been exposed for 36 months, I will tell you that I'm waiting for a market correction.
Okay, fantastic. Someone's going to speak. I think let's do Femi, and then we're closing right now. Femi, hi Femi. Femi Olo Jede. I don't know if it's Femi. If you can speak. Yeah, Olumide, we'll have to call today. I think it's been, you can see, Olumide, just look at the space alone. If you just look at the space and just use the space as your data, right? Look at the commentary, the interest in this topic and all that. It just tells you what Nigerians are looking for. Look at the last question we got as well. People are a bit anxious about political directions and how that would affect the market. I'm worried about that. I think people are saying that the market is booming because it's based on one political party. Remember, guys, that the markets the Nigerian stock market was number one twice in a decade before there was APC. I think I'm correct in saying that. APC has done pretty well, like Olumide has said. The market capitalization, removal of subsidy, attracted revenues, attracted liquidity, and that boosted the market. And when one market is going up, momentum builds momentum. So when markets are going up, there's more money coming in. So it's a positive momentum building. We can't take that away. Yeah. But I don't think if the market crashed to Olumide, I don't think if the party loses office, I don't see the stock market crashing because a party lost the election.
But it depends. So, for example, I think it's going to be a bit tricky if we say that Nigerians, like the market, just giving the political party the whole credit of the market. But the reality is that when the right macro policies were catalysts for the transformation, especially this bullish one. Look at January, for example. Yeah. Just reforms around the pension industry.
Pushed the market.
The catalyst pushed
the
market.
You're right.
Yeah.
I concede. You're right.
If we have political instability, that's not going to be good for the market. Okay. If we have if the election comes out and it's cloudy and the country is disjointed, God forbid, it's not good for the market. All these things are going to unwind.
So what we need is an orderly transition.
Exactly, or stability, or a stable political system. That's what we need.
Completely agree. On that note, let's call it a day. Thank you, folks. We've been talking around the Dangote refinery. We've been asking the questions: will it going to make you money, or is it going to lose you money? I would say that from what I have heard and what I've learned, I think the Dangote refinery has a higher chance to make you money than to lose money for you. That's how I would put it. If there were odds, I would say 60-40, you're going to make more money with investing than losing money. I will not leave you with, again, go read this article from the African Oil and Gas from a guy called Dimeji Bashir, where he not just did he explain what the refinery is, what the refinery is doing, all that single train, all that technical language. He gave you, I think, what you should look out for as an investor. You look at the working capital, the debt, the liabilities, the regulatory risk, and even dollar dividends. That would give you a better, 360 view of this business that you want to get into. Like the gentleman Eric said, we've never seen this before. The scale of what's going to come out, not just in Nigeria, I think globally, there is no new refineries that have been built like this one of this scale. So this is brand new. We're going to learn together. So are you risk adverse, or do you capture risk by hugging that risk so that way you are actually in? This is Nigeria, Africa's, and even the Sub-Saharan Africa's, even the third world's largest single investment in over, I would say, 25 decades. Nothing like this before. 20 billion. You can count on your fingers the single individual projects in the whole world that are 20 billion. And this is one of them right here in Lagos and Nigeria. So we're very, very grateful, and we hope that this investment will pan out the best, and that we as investors, Nigeria as a nation, and of course, Africa as a continent, reaps the positive benefits of the Dangote refinery. So guys, always be investing. Just want to thank all of you that have tuned in. We'll be here next week. Maybe a little bit next week we'll review the administration's economic performance, stock market, the economy, point by point, because they've done 3 years, we can now look back, right? Then maybe we could do that next week. Thank you guys. Appreciate you all for listening. It's been wonderful having you guys here. And I do hope you join us next week when we're always here, 7 p.m. West African time, to talk around money, the economy, and of course, investing. Thank you for our sponsors, Bamboo as well. We appreciate you guys. You guys have a good one. Take care of yourself, and bye. Olumide, thanks so much. Appreciate you.